Greetings, Earthlings. Welcome back to Midas Letter RAW. We have an interesting sort of differentiated show for you today. We are going to talk to Ron Gershoni in a short while. Ron is the CEO and co-founder of Jetty Extracts. Jetty Extracts is in process of being acquired by Cannex Capital Corp, CNNX, on the CSE. And Ron is a really nice guy. We're in fact going to go shoot his operation next week in Oakland, California. And we're going to talk to Ron for about, 10, 15 minutes. We're also going to have Ben Smith here, our ace writer. He's going to be joining us as soon as I actually finish reading the news. And we're going to run through a bunch of charts with Ben, and Ben's going to give us his 2 cents worth. We're going to look at some of the coverage that Ben gave us over the week on the cannabis sector, and we're going to look at the cannabis sector today, which is decidedly a little bit weak in the knees. And that's interesting. My computer just died with all my news in it. Okay, what happened there? Why did that die? Anyways, as per usual, it's going to be a technical nightmare. It's going to be insanity. It's going to be... there it is. Phew. Anyways, before we get to Ben, hello everybody and thanks for joining me. Justin, how are you doing? Boy, you are our biggest fan, I think. Carl on bass 181, hello. Is that my buddy Carl Baird? He wasn't a bass player, he was a drummer, so I'm going to assume no. But anyways, hello guys. Thanks for joining us. And yeah, so we're going to start with some of the news items that happened in the cannabis space today. Nutritional High International trades on the CSE under the symbol EAT, E-A-T, announced that they have received a $2 million conditional lease for the funding of a new extraction and lab processing equipment from Veterans Capital Corp. The new equipment will be utilized in their facilities in California, Colorado, and Green Therapeutics facility. Wait, I'm going to reread that because I'm pretty sure what it wants to say. They have entered into a $2 million conditional lease for the funding of their new extraction and lab processing equipment from Veterans Capital Corp. The new equipment is to be used in their facilities in California, Colorado, and Green Therapeutics facility in Las Vegas once the acquisition is concluded. Nutritional High are also doing a $4 million senior secured convertible debenture, which they will use for capital projects and general working purposes. That offering is expected to close this month. Ravensquest Biomed, CSE RQB, they've completed their previously announced private placement. They issued 11.5 million units at 70 cents for aggregate gross proceeds of about $8 million. They're going to use the money for their Western AgriFarm and Fort McMurray facilities and for general capital purposes. Canvas MedTech, CSC listed MTEC, announced they've acquired over 650 online domains since the inception of the company. They're not growing marijuana, they're growing websites. No kidding. The majority of these domains will be used for marketing, awareness, and customer acquisition as the company rolls out its global expansion plan for the Canvas.me platform. Boy, I can barely keep one domain up and running. I don't know how they're going to do with 650. Green Thumb Industries, trading on the CSE under the symbol GTI, announced they've entered into agreement with a syndicate of underwriters who are going to purchase 7.3 million subordinate voting shares for $11 a share. Wow, for total gross proceeds of $80.3 million. Green Thumb intends to use the proceeds for business development, including the acquisition of one of 10 licenses in the regulated New York cannabis medical market, and they will build out 5 dispensaries in Ohio. That's a pretty hot market there in Ohio. Crop Infrastructure Corp, who we're technically, theoretically, maybe going to visit next week. We haven't heard back from them. We haven't got anything scheduled with them yet, do we, Suzanne? No, not yet. Why not, Suzanne? They haven't responded to our email. Anyways, we would like to go visit them. We might not have time. We've only got 4 days in LA next week, but we are going to go visit Jetty Extracts and do a few other things for our upcoming film. Anyways, Crop Infrastructure announced that their tenant grower, the Hempire Company, Hempire, get it? has been issued a formal Nevada hemp license. The license covers all 240 acres of Crops Nevada farm. 240 acres. That is a big ass plantation of marijuana. Let's see. 3.4 million square feet is 80 acres. 88. So that's huge. Okay, we got to get these guys into the studio, Suzanne. That just sounds insane. 240 acres. Are they growing it outdoors? Planting has been completed on 120 acres. Is now underway on an additional 120 acres. What? That's got to be the biggest grow op in the world right now. 240 acres. Okay, we're going to have to stop by Las Vegas and check this out. So the rumor is, or the press release is, that their plants are all in their agricultural production phase and are all deemed organic. Boy, this story is getting more interesting every time we hear about it. The genetics selected have a THC content of below 0.3% and a CBD content above 15%. Oh, they're growing outdoors. They're growing hemp to produce CBD for extracts. That's a very intelligent move. I've been advocating for that was going to happen for quite some time. I've tried to talk a few companies into doing it. They said it's never going to happen. CBD is always going to come from inside in Canada. Thank you, Crop Infrastructure, for proving all the naysayers wrong. In Nevada, no less. In Nevada, that's not exactly the first place you would think that marijuana would be good to grow. Going to be pretty hot there, but I guess it depends whether they're in the desert and in the mountains, whatever. It could be a number of things. Anyways, that is all of the news we have to report. We're going to talk to Ron Gershoni now, and when we finish that, Ben Smith will be here to talk about some of the technicals in the market, and we're going to talk about the market overall. If you have any questions, please feel free to load them into the chat on either MidasLetter.com or on YouTube, and we will get to as many of those as we can. At 4:30 today, we're doing a live Ask Me Anything, myself and Ben, and we're going to stream that. All the questions, we've got something like 75 questions from various users on Reddit/r/weedstocks, which is a 50,000 member strong Reddit. And we're going to get to as many of those as we can in an hour and a half. The rest, we will answer every question that makes sense and is conducted or is asked of us in a somewhat respectable tone. We'll answer them all eventually, probably over the weekend. Anyways, here's Ron Gershoni now. Hey, welcome back to Midas Letter Live. My guest this segment is Ron Gershoni. He's the co-founder and CEO of Jetty Extracts, wholly owned subsidiary of Cannex Capital, when the deal closes. When that'll be? At some point near in the future. Keep watching here to find out. Ron, thanks for joining me today. First time on the show. I'm excited. Are you excited?
Absolutely. Okay. Happy to be here.
I'll try not to let you down. You didn't bring any Jetty Extracts with you, did you?
Unfortunately, I couldn't bring them over the border, but when you come visit us...
okay. All right.
It's now legal in California, and we'll be happy to get you set up.
I will bring my appetite. So tell me about Jetty. How'd you get started, and how'd you get into the extracts game?
So we founded Jetty in 2013, myself along with two friends. My father became a medical cannabis patient to help him sleep due to severe back pain. And at the time, a friend of mine who was a cultivator pulled out a vape pen and said, hey, we could make these. And that was sort of the genesis of how we started. My background's in CPG, and I believed at that time, and I still believe today, that the biggest and most scalable opportunities in the cannabis space will be brands, and that the biggest brands will be born in California.
Ah, okay. So tell me about the cannabis market in California. Outside of California, we get a lot of contradictory information, and I believe that's probably, at least in part, a result of the fact that within the state, county by county, the rules are different. There's different sort of licensing categories. There's different levels of testing required at the final product. Like, what is it like to operate in California, and are you operating where you're operating because it's simple and you've got it figured out?
I would say nothing in California is simple. We are operating in Oakland, which is a fairly friendly municipality, and the state is extremely fragmented. So we have moved several times until we've settled into our current manufacturing and distribution facility. The state legalized cannabis, which went into effect January 1st of this year, and that's for adult use as well as medical use. And it's been kind of a chaotic year, but we've been preparing for this for quite some time and have pretty much all of our packaging and our product and our distribution system dialed.
Okay.
So we're really excited for what we see as a really big opportunity to introduce Jetty products to new consumers that were not previously part of the market.
Okay, so do you sell Jetty Extracts now in California?
Absolutely. We've been selling since we started. We have
Okay.
our own branded, we make concentrates, so we don't cultivate and we don't retail. We bring in the plant material and then we do extraction processes on that material and formulate different sorts of oils and waxes, and then we usually package those into vape cartridges. Vape cartridges right now in the California market and in many legal markets make up 50% or more of the total market share.
Wow. So do you make like shatter vapes?
We've tried making shatter vapes. Most of what we make right now are actually oil inside.
Okay. So what's the highest potency I could buy from in a Jetty vape format?
Right now, the highest potency we're putting out is probably close to 90%.
Okay, that is at least 3 times too potent for me. I'm like a one-hit kind of guy. I'm good for 2 hours. But so I guess just from like Canadians, we have no history of pre-packaged vapes that have ever been legal. So there's a whole swath of Canadians who are going to be like, what, 90% in a vape? That's just not happening. But that's not to say the only way to acquire or to consume cannabis in a vape doesn't have to be super potent. In fact, the great thing about a vape is you can get super mild, you can get great combinations of CBD, THC to sort of service whatever condition it is you're targeting, right?
Well, we're in the process of a brand refresh to kind of modernize and be a more welcoming presence to a lot of new consumers. And we are introducing some new products that will be lower potency specifically for that reason. In California, prior to January, our best-selling products were always the highest THC per dollar.
Right.
And we see that changing as
Right.
newer consumers want to make sure that they're not getting too high. So microdosing has become a much bigger part of the market, and we're introducing products specifically at lower doses to make you happy when you come visit.
Right, yeah, no, that's great. I went through school, and when we were kids in high school, it was all about getting as high as possible all the time, as much as possible. And mind you, but we weren't faced with even dried flower. I mean, I doubt we ever smoked flower at even 30% THC. I bet you it rarely got higher than 25. And I believe that potency of cannabis would have originated in California, because I'm talking back in the 70s, we used to get it from Mexico and Colombia. In the 80s, that's when the whole Sensimilla sort of boom started happening out of California, which triggered all the double down on law enforcement and actually catalyzed the BC underground grow scene. So it's kind of, I feel like, especially in Vancouver, where I lived for 26 years, it feels like we're related to California. But, I've never been exposed to anything growing or part of that scene in California. So I'm excited to come down there and shoot you guys at your operations with a camera crew.
Well, the purity and the potency have certainly increased substantially since the days that you're speaking about.
Right.
And I think when you come down and when other Canadians, or really anyone from any other market, comes to California, what they see on the shelves is a very sophisticated, advanced market. The low barriers to entry have really fostered innovative products and innovative branding, and the quality and selection in California dispensaries is years ahead of almost any other market in the world.
Yeah, so when I walk into a well-stocked dispensary in a prime location in LA or Oakland, I've got not just Jetty vapes, but I've got hundreds of different brands of vapes and concoctions and combinations and formulations to choose from at this point?
You already have that.
Really?
The market is shaking out a little bit, and the costs of compliance in this transition are significant. So I do think we're going to see a number of existing companies that will not be able to make it through the transition. But that said, there's vape products, there's edibles, there's topicals, there's flour, there's pre-rolls. There's really a whole lot of products that's branded and ready for you to pull off the shelf and consume.
It's funny, our legal rules for recreational kicks in October, and our government's all a Twitter about, oh no, we will allow, extracts, but no edibles, and it's just like, what's the difference? How about what if I eat my extract? It's crazy. So in California, do you think that are you concerned at all about the risk that an oversupply of product or raw material catalyzes a price competition to the downside that actually starts to eliminate this abundance of variety?
I don't think it'll eliminate the variety. But I do believe it's inevitable that there will become an oversupply, and it will have downward pricing pressure on the plant material itself. And we've seen that happen in Colorado and Washington and Oregon. So as these markets get developed, the supply side comes on strong, and you do see that downward pressure. We're not a cultivator, and we don't really intend to cultivate at scale. So we enjoy purchasing from farmers that we work with and processing the material into branded products, which I believe are going to be a bigger portion of the market, and also a portion of the market that has more sustainable margins.
So is part of your day just going out to see all these farmers and saying, so what's the crop? What did you grow? And trying it out and saying, oh yeah, okay, we'll take that.
Unfortunately, I don't get to do that too much anymore, but years ago...
You need somebody too? I'm putting up my hand.
We've all done plenty of that.
Yeah.
At this point, we're a larger buyer, and we have really solid relationships with some larger suppliers.
Oh, interesting.
But we've all spent a lot of time out at farms and really enjoy supporting some of the small farmers that help build up the industry.
Sure. And so what part of California do you source most of your raw material from?
Most of our material is coming from Mendocino County and Nevada County.
And Nevada County, not Humboldt.
We also source from Humboldt. We kind of are very selective about who we work with, and we specifically want to test everything before we start processing it to be sure it's free of pesticides. And so we'll select out strains that we're looking for from different areas, but currently Humboldt is not the majority of what we run.
Right. So your relationship with Cannex, what is that going to accomplish for Jetty Extracts as a national brand in the United States?
So it became clear as the regulations were presented to the California companies that capital was going to be required in order to survive and to thrive. And so we went out looking for some capital partners, and what we found in Cannex is a real operation, and it's proven in the fact that they are number one in the state of Washington every month in as far as production and processing. We see a lot of synergies with their operational expertise. They can add a lot more to Jetty than just the capital that we see coming in from all different types of sources. We're going to be bringing our Jetty products up to Washington, and some of Cannex's products down from Washington into the California market, probably within the next month or two.
Oh, sounds like a very happy relationship. All right, tell you what, we're going to leave it there, Ron. I'm going to come and visit you actually next week in California, and we're going to come back to you regularly and keep tracking this story, and I can't wait to try the Jetty Extracts.
I'll put aside a 90% potency pen for you.
That will not be necessary unless you want to see me act like a clown. Anyways, we'll come back to you soon. Thanks for joining me today.
Thank you.
Hey, welcome back to Midas Letter Live. Ben Smith is here with me. Ben, welcome back.
Great to be back, James. Thank you.
You've been writing away like a maniac over there.
Well, that's what I'm paid to do. So hopefully I'm coming up with some good narratives, actionable narratives that people can capitalize on.
Yeah,
That's
no,
my goal.
you're doing really well. What do you make of the markets generally this week?
Well, this week I think the markets, they're showing some overt signs of weakness, especially in the small cap space. I was looking over some charts all week, like I do, generally, and many are making 52-week lows. For example, Newstrike is showing weakness, protracted weakness this year. Emerald Health today, a new yearly low, and a few others out there. So I think a lot of people might be concerned about the going concern of some of the smaller LPs out there, and I think we're seeing it play out in the market.
Yeah, okay. So in particular, Emerald Health, you wrote an article this week that is titled Emerald Health Therapeutics Hit Hard on BC Supply Deal Bypass. What exactly is the gist of that article?
Okay, so yesterday, as most viewers know, at the end of market on Wednesday, the BC Liquor Board, the authority in British Columbia, issued 31 memorandums of understandings, MOUs, for suppliers as of October 17th when legalization comes online. Now, the big story the big story in this case with Emerald Health was that they weren't included on that list. And as many investors know, Emerald Health is from Vancouver. I think they're headquartered in Victoria, and one of their main grow-op centers is in Vancouver, I believe, or just outside Vancouver. So to not be included in that list, I think was rather striking, because usually we've seen the pattern that LPs of that particular province where the MOUs are coming out generally receive some sort of offtake agreements. It's happened everywhere, even smaller companies like Delta 9 Cannabis. Some of the smaller LPs have been getting.
So any idea why Emerald Health was left off that list?
Well, that's a good question. From what I was hearing and what I was able to research, I think the answer is not entirely clear.
Okay.
They do have a joint venture with Village Farms in there for some offtake agreement between those two companies. And Village Farms does not have a sales license. So, as stated in the article, I'm not sure if that came into play where, whether they're unable to sell or offtake to the BC authorities, or whether that came into play, or whether they just chose to have their cultivations, move their cultivations elsewhere.
So, Village Farms grows for Emerald.
I'm not sure if they actually grow for Emerald. I know they grow their own, they have their own cannabis farms as well. But I know that they have some sort of agreement. And I'm not, to be honest, I'm not fully, versed of the exact numbers. But I know that there is, a partnership between those two companies where some cannabis inventories are changing hands.
Okay, so that stock's lost 32% here?
Well, as of the article, it was something like a third of their value, or just under a third, since June 18th.
Really?
So I think, the bigger story is even going back from Wednesday after the bell, where they didn't receive that offtake agreement in BC.
Right.
The stock was showing overt signs of weakness before that. So I think, perhaps when it became clear that they weren't receiving any offtake or MOUs in Western Canada, in Manitoba earlier this month, and Alberta was recently as well, and they were, they did not receive an MOU for that. BC was sort of the final, I wouldn't say death knell, that's rather extreme, but it was a catalyzing moment where people realized that, okay, they're not getting an MOU in their own province of origin. So, some people perhaps sold the stock.
Sure. I saw an interesting comment on Reddit, coincidentally, that said that, I think the gist of the guy's comment was, I don't see that being denied access to sell their products in the Liquor Control Board should be an expectation of a company that's called Emerald Health Therapeutics. Implying that the very name suggests that they're focused on medical, not on recreational. So if that's the catalyst that caused the sell-off, it's perhaps a little bit misguided. And even Emerald Health themselves issued a press release yesterday that outlines their differentiated strategy. So they're saying that their focus is to conceive and patent novel ideas, license or develop proprietary products, and display thoughtful leadership position to the marketplace. But their products may be protected by unique formulations, delivery methods, and applications. So, but they're making the case here that we're focused on medical. So, what's everybody selling our stock for on a recreational, development?
Well, that's a good point, and a case can be made for that for sure. But I think one of the problems in this case might be messaging, because yesterday, perhaps, gauging the market and realizing that it may not go down so well, they issued a corporate update at 11:15, I believe it was, yesterday morning, to outline that strategy. Now, in that corporate update, and it's actually in our article, in the quote box in the article, they also mentioned that they're currently cultivating and that they will be ready for legalization come October 17th. So with that language in there, it sure makes it seem like they're being prepared. They're preparing themselves for the advent of legalization on that date. So. Maybe the messaging isn't there. Maybe that's true. Maybe they are focused on refined products going forward. But it sure seems that it does seem a little bit odd that they wouldn't commit to some form of offtake on the 17th in their home province, even if it was just for marginal amounts, with 31 others being in that receiving MOUs.
Okay, interesting. All right, let's take a look at some of the other index constituents here. And I mean, across the board, it has been a relatively, negative sort of market lately. Looking at Emerald Health, let's go take a peek at the main index. Slowing down here. Here's the index page. Now, Canopy Growth down 2.7%. Aurora is off 2.7%. MedRelief is off 3.5%. Afree is down 1.5%. Kronos Group is the only green symbol we have on the large cap index, which is so what generally do you see happening in the market to drive such sort of negativity?
Well, that's a really good question, because I'm not sure if anybody truly can answer that question with 100% certainty. I think some of it has to do with with news flow. Perhaps the offtake agreements, now that BC has come into the mix on Wednesday, there might not be that news flow to carry the sector higher. And of course, valuations are very forward-looking and very extreme if you're looking at what's happening in the next few months. So it's been a very news flow driven market. And now that the volume compression summer volume compression is here, and the news flow is maybe not slowing down, but good
Tepid.
News flow. Yeah. Now that the offtake agreements are out there, there may not be that news flow driving the market.
Do you think that one of the sort of influences of the agreements with all of the provincial liquor agencies is, because this is my own sentiment, I look at this and go, oh, any medical marijuana company that can fog a mirror gets access to this channel. So if you took a look at the Emerald Health thing and say, okay, except for some, and we don't know the backstory on that per se at this point, but we'll probably find out. But do you think that there's a sense that, well, if everybody who's growing marijuana can sell it in these liquor stores, there's really, there's no way to sort of differentiate who's going to win and how the product placement is going to be determined to see who gets the eye level, top placement versus who gets the end of the aisle on the lowest shelf placement. And so for me, as an investor in all of these companies, I think, well, there's really no reason to say that a company A or B, whether it's a large cap versus a small cap, an Alberta company versus a Ontario company, there's no reason to say that these companies are going to necessarily prevail over one another. And that, to me, that suggests that this is a race that's going to be largely predicated on quality and price.
Well, I think you sort of hit the nail on the head on why we're seeing widespread market weakness, especially in the small cap space. Because unless you're, the Aurora Cannabises of the world, Canopies or Apria, for some of the, the tier 3, call it, cannabis LPs out there, And we've seen in the MOUs at West, right, that there was no offtake commitments. In Manitoba, for example, Canopy received 25,000 or up to 25,000 kilograms supplied in that market. I think, that was Aurora, and Canopy was 15,000 keys. And there was a couple others, but outside of that, all the MOUs, 4 of the 13 actually had supply numbers, and 9 of the 13 did not. So I think that suggests that, the smaller players out there, the New Strikes, and some of the smaller ones out there, they have their foot in the door, but the problem is we don't know if the product is going to sell. So they'll have their foot in the door. They may not have ideal shelf space, and it's going to come down to branding. Because THC quantities, CBD quantities are all going to be there, right?
Yeah.
Price, it may come down to a little bit of price as well. Some of that might be controlled, but I think it's really going to come down to branding and word of mouth, branding, quality, reputation.
Okay.
And that's where the tier 3s are, I think, and I've argued in some of my writing that they're all going to be fighting towards surviving in that pack where you're going to have a lot of players and where branding and is going to be key.
Right. Some of the companies in the venture have actually done very well today. Namaste Technologies is up 3.5%. Viridian Pacific Group is up 3.6%. Arch Biopartners 6.7%. Nutrisci up 10%. Mind you, it's just a 12-cent stock at this point. Vanc Pharmaceuticals Inc. up 11.6%. I'm going to take a quick look at their stock page and see what the news is that would see. Oh, I see. It's a 19-cent stock, so it's not too hard to move that needle. So their Hemifer market presence with Amazon Canada store launch and advertising approvals. Okay, interesting. Don't really see a good reason for that stock to be up. So, but if we stretch the list here and look down after 1, 2, 3, 4, 5, 6, 7, 8, 9 stocks that have gone up on the TSX venture in the cannabis space. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, call it 22 stocks on the TSX venture that have gone down. So 10 stocks up, 20 stocks down. Why is it that the small cap venture sector is so plagued with uncertainty and weakness? I mean, market generally, you already made that case, but it seems to me that the small caps in particular are getting a beating.
Well, the more I analyze the market, the more I'm seeing a differentiation between some of the small cap players. And what I mean by that is we have an article that I wrote a couple days ago on national access cannabis.
Okay.
So it just reached its new 52-week high this week. It's been very strong. It's up 80% over the last month, whereas some of the junior LPs are down anywhere between 10 and 30%.
Okay.
So I think what you're seeing is perhaps some sort of rotation. It's just a theory. I'm not sure, 100% sure. But I think you might be seeing rotation into companies that are a little bit safer. National Access Cannabis is not an LP, so they're not subject to capital outlays and $80 million greenhouses that they have to build. They don't have to go to market for big financing. They may not ever be a huge Goliath in the industry and have $1 billion revenues of a Canopy, but they have to open retail locations and they provide a service that is scalable and it's not too capital intensive. So I think, and Aleafia is another one that trades on the TSX as well. And if you go in the States, where sort of the retailers and dual LPs and limited scale LPs like MedMen and GTI before the capital raise are outperforming as well. So I think it may have something to do with not have to keep up with the Joneses, for example, and build a new automated $100 million greenhouse and everything that goes along with that.
So the service companies are starting to become of interest when the weakness comes in.
Exactly.
What about what Vic Neufeld told us over a month ago, that a lot of these smaller companies you're starting to see in their financial reporting a lot of going concern language, indicating that their auditors or their accountants are increasingly insisting on putting that dreaded statement in there that there is no guarantee that this company can attract capital sufficient to remain a going concern, which is, we see that all the time in the mining space. All mining companies are questionable going concerns as long as they're in the exploration phase. But as long as they keep raising capital, they keep going. But in the cannabis space, is that something that you think we should discount, or do you think that's starting to pull down share prices and make them less likely to get funded again?
You know what? Honestly, we've been writing about this. So I think regular Midas Letter viewers or readers will know probably my thoughts on it already. And the Vic Neufeld article where he talked about smaller LPs living on their income statement and not necessarily being able to fulfill their supply agreements. That was one of the big articles that we've written over the past, in terms of views over the past month or so. So I think a lot of people are plugged in on that, or more and more people are plugged into the narrative that a lot of these companies a year ago where they're jumping from 50 cents to $3 a share, $1 to $5 or whatnot. Now that we're closer to legalization, now that the MOUs have all been dished out, if you don't have a spot on the table with significant offtake, or if you're just starting to build a greenhouse now, that's not ready for Q4 2019,
Right.
you may not be in the best standing. So I think quality is coming to the top, and that's why I think we see a lot of pressure in some of the tier 3s LPs out there.
Yeah. So would you say, from a sort of technical perspective, looking at the charts, would you say that the opportunity is more so in companies that are better cashed up, are not so reliant on their sort of balance, making forward progress towards positive revenue generation? Are those the better investments then at this point relative to the ones that are not really accomplishing much and spending a lot of money?
Well, I think there's a couple ways to look at it. I tend to be a contrarian by nature, some of the time, but I do believe with most of some of the pundits we've had on the show and some of the guests, believing that the best investments are the tier 1s in the space, like the Canopy Growths, Aurora Cannabis, and Afria. Simply because that even though forward valuations are pretty stretched if you look on a near-term basis, they're so diversified that they have all this intellectual property that they're eventually going to streamline into finished products and higher refined goods and higher margin products, that they're going to be fine. But if for small cap investors looking to invest in sort of the tier 3s and the smaller LPs, I think you really have to make sure that they have a good quality that's going to stand out in the market, such as a niche brand. I don't know if I can name names on here, one of the ones I like, but James Wagner, for example, I think is very attractive.
Okay. And by way
maybe I can't.
No, by way of disclosure, they are a client of our GFN media division, so
Yes.
we always need to disclose that. So does that color your bias towards them at all, the fact that they're a client? I guess not, because you don't get any extra money for that cause, do you?
It doesn't.
The film guys get all that.
Well, I think one of the things that viewers may not know is that although we have clients and we're fully disclosed, you don't actually tell me the client list. So I have kind of free autonomy to write how I see the market, and I analyze the market on my own way. So it's sort of like a Chinese wall, and I think that works great. I actually didn't know if James Wagner was a client.
Canadian wall.
A Canadian wall. So there you go. For viewers who didn't know that, there's actually I actually have that autonomy, which works well. So they're a client, great, but I still think some of the niche players, the niche LPs, or some of the ones with a differentiating brand that can really stand out on the marketing side is where you want to be.
Okay, interesting. I'm looking at some of the some of the questions on Reddit right now. We're supposed to start answering questions at like 4:30. I guess I'm supposed to go to the weedstocks Reddit to answer these?
Yeah, I believe so.
Okay, so we're gonna start to answer some of the questions and discuss them now, because we've got over 70 questions, and we're only going to go till 6 o'clock at the most. So that's like 2 hours of question, and that's about all we can take here. It is Friday before the weekend, and so it's interesting. So we're an approved submitter. So let's see here. Okay, here's our AMA. There's 65 comments in there. Great. So I want to sort of, what were some of the more interesting ones? Like, let's start to drag these questions out and unpack them, as they say in Bloomberg world. And, because there's some of these questions are not, it's not a binary answer. It's like, oh my gosh, you're asking for some pretty significant data analysis.
You know
really.
what? I want to give the Reddit folks and the commenters in there a lot of credit, because I was going over the question list and the comment list last night.
Mm-hmm.
And there's some very, very intelligent questions in there. I mean, this is not some forum where...
You're surprised?
No. Internet forums, yeah, maybe,
Well,
if I'm being honest. But I mean, the questions are really high grade. So, congratulations to the folks who submit questions. They're very good.
Okay, well, that's great. Let's see. There are a lot of interesting questions here. This is one that's like sort of multifaceted. So we're going to start with this question. We're not going to, 4:30 we're supposed to start answering. We're going to start now because these are some questions. So JD Cyclists, after a flattering remark, which I shall not reread here, says that different versions of this US versus Canada question have been asked. No need to address mine in particular, but would appreciate your thoughts on the topic in general. Beginning in early 2017, I invested in most of the big Canadian LPs and a few small caps. At the beginning of 2018, I moved my entire portfolio to US multi-state operators. I'm invested with Acreage, Forefront, Ianthus, MPX, Green Thumb, Liberty Health, and Canada Royalty. Understand the Canadian market may be considered more advanced, less risky, but in my view, because of the U.S. federal illegality dynamic and the 10x size of the U.S. market, with so many different products already available in many states, and the institutional capital wave will soon come, there are far greater fortunes to be made in the U.S. in the relative near term than in Canada. I have yet to hear sound reasoning purely from an investment returns perspective to look again at any of the Canadian companies versus the good US companies. I have no doubt that some of the Canadian companies will do very well, but I've never seen a better investment opportunity than the vertically integrated US multi-state operators with top flight management. What are your thoughts? Wow, that is a loaded question to say the least, JD Cyclist, but I couldn't agree with you more in some respects. Certainly the idea of investing in a Canadian late-stage LP and catching the wave as it grows from licensed grower to larger grower to multi-province operator and tries to elbow out some of the space on the shelves of liquor stores is a losing bet. And so I think in large part, a lot of the weakness we're seeing across the board in Canada is precisely because the US market is coming and it's coming on strong. We've had MedMen, we've had, Green Thumb Industries just raised $80 million. You've got Acreage Farms about to go public. You've got Krish Bottles about to list on NASDAQ. Kronos, which is actually US investors who have come to Canada and elbowed their way into the market. They're the only large cap company that's up slightly, and I suspect that's because of the US connection. So I have to say for myself, and I'm going to let Ben give you his thoughts in a second, but for me, I agree with you. I think all of the upside is in the multi-state vertically integrated US operators. That's a great statement. However, I do think that in some cases there are some smaller US companies, or Canadian companies rather, that have very tight share structures, that have been financed intelligently, and that have been beat up, especially in the last couple of weeks here as the summer doldrums set in, that are going to nonetheless be very successful when it comes time to value the companies on the balance sheet. And that time is when legalization arrives in Canada. Aurora Cannabis is the largest supplier of medical cannabis in Germany, and that's something that no U.S. company will be able to touch in the near term. Certainly the competition for international markets is going to be fierce, especially as the U.S. comes on and federal prohibition comes to an end, and that's going to give, if the U.S. deepest pockets start to, compete for those channels, the biggest Canadian companies, the multi-billion-dollar ones, obviously they're going to have access to capital to go toe-to-toe, but I think all of the smaller ones are going to be gone, and I think we're sort of seeing right now the end of the small cap speculation in the Canadian-focused cannabis company. What are your thoughts, Ben?
Yeah, I think that's very, very true. I would say that there's a lot of good points in that question, but you would have to define what acceptable returns are. If you're looking at, say, at the top end of the spectrum, the cannabis and Aurora cannabis, they're could still, based on internationally where they're at and based on their position in the provinces currently, I think there's still a lot of upside, even though things are very forward-looking right now. So I think there's a lot of appreciation in the stock that could transpire over time, and that presents a lot of opportunity, even though things have sort of front-run a little bit. But I would say, in terms of some of the smaller players, and the user had some smaller positions and some smaller cap stocks, I would say that that's definitely true. If you're looking at sort of the tier 3 Canadian LPs here now, that may not be the place that I would go personally. There's definitely, I think, more upside with some of the smaller caps, vertically integrated cannabis companies down south. Yes, so I think yes and no. At the high end, I still think some people think that some of the high end, the canopy growths might be a little bit, overextended and all that. That's not personally the way I look at it, based on the opportunities and based on legalization kind of, exploding worldwide. But on the small cap side, yes.
Okay. Now it's interesting because that question has catalyzed an entire thread of discussion on Reddit, which I think it would be sort of silly of us not to take this opportunity to consider some of these. And so, for example, a user named Natora, who's been upvoted to 3 points, said Canadian LPs equal higher market caps equal better ability to raise huge amounts of capital, and in brackets, with much lower dilution in bought deals, equals enabler for worldwide expansion. So that's a valid perspective. Certainly one of the things that we're seeing in the companies that are coming, the US vertically integrated companies that are coming to Canada, is some pretty egregious share structures. Like the MedMen one comes to mind, where the two founders control 8 million shares. That gives them actually 8 billion votes to the 386 million equity founders. That's not something that appeals to me, but you always have the vote of selling the share if you don't like it. So that's vote with your wallet. Certainly some of the smaller companies in Canada that are, under 100 million shares out market cap, if those guys start to, demonstrate $50, $60 million a quarter in revenue, there's going to be a lot more compressed value in those shares. They're going to rise a lot further, a lot faster. So, what would you say to that?
Yeah, I would say definitely that's a fair statement.
Yeah, wow, there's a huge conversation about that. And it gets a little bit off the mark at the end. So let's see, here's another one. Okay, how do you compare a company like SAM, Boston Beer Company, with 2017 revenue of $921 million and market cap of $2.7 billion, to Canopy, with 2017 revenues of $78 million and a market cap of $7.7 billion. Is CGC's valuation more representative of the company circa 2025? Can we expect much price appreciation in the meantime? Or are the next few years of legalization already heavily priced in?
You want me to take that? I'd love to take that.
You go first.
I'd love to take that one.
Yes, all yours, man.
This is one actually in my review that I was thinking about. And I think that, first of all, the numbers that they're putting out now in terms of current revenues and valuations doesn't mean anything. Legalization hasn't even happened. So sometimes when I read it, some people are talking about, what the earnings are going to be, are things going to react consistently to the letter. No stock has reacted on earnings in the Canadian LP space right now. Mm-hmm. We saw it with Organigram, Hexo, any stock out there, they've released earnings, volumes actually decreased. There's been no movement. There's no alpha. There's no alpha.
Afria, profitable for 10 quarters. What has the stock done?
Nothing.
Flatlined.
Exactly. And why would you care about earnings when legalization happens? I mean, in the BMO report that came out, Bank of Montreal report, which was the first Big Six bank coverage that came out in late May, in case the American viewers don't know, they valued Canopy Growth. I believe they had discounted EBITDA forward revenue at $1.2 billion by the end of fiscal 2020, which their quarter ends at the end of March. So you're talking about $1.2 billion revenues that they're forecasting in 2020. So why would the stock react based on last earnings report, which came out last week, at 22, that they're only making $22 million? It doesn't make any sense, because the revenues are going to go pear-shaped very soon. And once legalization starts and they start entering other markets. So earnings doesn't matter right now.
Pear-shaped. Earnings go pear-shaped, you mean they're going to crap out?
No, meaning that they're going to ramp, like a sort of a bell curve.
You know what the shape of a pear is, don't you?
Well, it kind of. Well, I'm looking at it on the way up.
An upside down
way
pear.
down. Yeah.
They're going to go
An
upside down pear shape.
Probably a bad analogy
so
there.
so if I'm interpreting that correctly, then you're suggesting that the valuations in Canopy, sort of referring back to the question, are more a reflection of future valuation or future revenue, future balance sheet, more so than today's balance sheet, and that's the way you have to look at that?
Yeah, absolutely. And so to address the question directly, does the valuation reflect what Canopy is going to be doing in 2025? Mm-hmm. I would say it's going to reflect a lot sooner than that, perhaps back half of 2019.
Sure.
I mean, BMO has put out their initial price target at $45 a share based on 2020 forward revenue EBITDA. Okay, so that tells you right there, and it was very conservative. I think that if it hits that mark, their valuation would be pretty much comparable to other CPGs like Diageo and some of the alcoholic beverage companies out there. And that doesn't even include, licensed products with Constellation brands that Bruce said that would be on store shelves if they receive Health Canada approval. So there's a whole bunch of revenue streams that Bank of Montreal did not account for. They're being very conservative, of course. They're not out there. They're not on the market yet. So I would say, Canopy's, although it's forward-looking right now, their share price reflects probably something what's going to happen back half of 2019, let alone 2025. 2025, I think the potential, if everything goes the way it goes, legalization worldwide, they introduce, some refined new products, beverages with Constellation, et cetera, I think we could be talking about multiples that are much higher than, the $45 price target.
Right, and going back to the comparison to Sam Adams Brewery, what is their potential for increased market share over the next 5 years? I mean, what is the potential for the increase in revenue for Sam Adams beers in the next few years? I mean, there's not a lot more they can do.
It depends if they buy a cannabis company.
Well, that's
a
good point. That's a good point. So, that's a multi-part question with a multi-part answer. And again, a lot of the in capital markets generally, the perspective is very much relative to where you are in the timeline. So if you were to look at Canopy, 2 years ago, and there's no way you would expect to see this valuation now, even though this valuation is based on a timeline or much further down the timeline.
Yep.
And so I would say this is pretty typical of an emerging market, of a new market. You sort of saw this with the dot-coms. People don't understand where the potential lies. And so there's a mania that develops, especially as the valuations start to amp up, and that again increases the rate at which people stampede into it. And so the valuations go to where they really have no business going. But at the end of the day, you have no business saying where a valuation belongs. All that you should care about as an investor is it going higher from where I'm buying it? Or am I buying it at the top? And so, again, it's all about where you sit in the timeline. Is now a good time to buy Canopy? And are you going to see what are you going to see? Maybe a 2x, 3x over the next 5 years? Maybe.
You know what? You make some really good points there. People have to remember that in 2000 or early 2017, when Canopy, I think, ran from $2 to $12, something like that, and it made its first real big run. People were saying it was a bubble then. People were were saying, how do I short the stock? It's way overvalued because it only had, $2-3 million in revenues. And based on what it was trading, 200 million shares out, they might have a little less back then, but it was still, 130, 150 million shares out. It was valued way above, it was punching way above its weight in terms of, revenues and so forth. So, obviously, it's forged ahead. It's now in the $40 or close to $40 a share Canadian. And, as we've seen, the opportunities legalization passed and the opportunities have nothing but expanded worldwide.
Yeah.
So, and, it's going into its valuation. It's growing into it. So people didn't necessarily foresee that early on. And now it's sort of proven itself to be correct. So.
Yeah. All right. So I hope we answered your question a little bit there, but I think we did. Okay. So let's see. Where is another question? We got a fresh thread. Okay. Oh, that's the question about Sam. Boy, these threads are long. Okay. Here's one from a Reddit. In case you're wondering, in case you're watching this on YouTube and going, where are these guys getting these questions? We don't see them in the chat here. What we're reading is Reddit/r/weedstocks. Weedstocks being the biggest marijuana forum on Reddit with 50,000 subscribers. I think I was like 49,995 or something, but so that's where we're reading these questions. We're going to publish these questions and all of our answers are going to be transcribed in real time as soon as the show ends at 6 p.m. And then we will publish them to Reddit/weedstocks, and we will also publish it to Midas Letter, and we will also publish it to God knows where, but probably lots of places. We want as many readers as we can get after all. Anyways, okay, so let's see here. Another question, oh yes, from Silvable. Since 2019 will be the year that the rubber really hits the road in Canada, and he's referring to the fact that recreational sales begin in October 17th, 2018. However, the balance sheet won't show the outcome of that legalization until 2019. Since 2019 will be the year that the rubber really hits the road in Canada, do you expect valuations to skid lower as reality sets in? For example, because margins are compressed, sales are muted compared to expectations. For instance, edibles are still illegal, competition proves deadly for many firms, black market remains healthy. If not, why? If yes, is this a U.S. better risk reward in the near term? Okay, well, so is the U.S. a better risk reward in the near term? That's an interesting question.
Again, I think we've kind of answered this question. If you want me to take the lead on this one, I think you can't look at the marijuana industry, the cannabis space, as a monolithic entity, right? You have to look at it as being different categories. So you have the blue chips, you have the Afrias, Canopies, Auroras, and then you have some of the mid-tier, the organograms, hydropothecaries, and so forth, and then you have the junior LPs out there. So you gotta look at it. You can't conflate the whole space and sort of group everything together, because the large caps definitely have a more preferable position, and they have a lot more irons in the fire internationally, and there's a lot more opportunities, including some of the best people to make refined goods, like Aurora after the MedRelief acquisition is going to have something like 15 PhDs working around the clock or business hours or whatnot, making refined products that they're probably going to get out there or be one of the first to market. So that's a whole different conversation than some of the junior names, won't name names, that only are trying to grow and they say they want refined products, but they may not deliver. So to answer the question specifically, on the top end, I think not necessarily, but on the low end, if you're looking at smaller cap space with more opportunities like Canna Royalties out there, MPXs, some of the smaller names, and you're looking for alpha and stock returns, huge volatility on the upside, that's where you want to play. Maybe the small cap space, junior to mid space in the States.
Right.
If you're looking for 3 to 5 year timelines where you're going to buy and hold and you're not really looking for that alpha, you're looking for strong returns over time, maybe they'll pay dividends over time, introduce a dividend when revenues come in, then the top end of the Canadian market is still a place to be.
Yeah, okay, well, so I'm going to say that it's specifically addressing expect valuations to skid lower as reality sets in because margins are compressed, sales are muted compared to expectations. Okay, I'm going to say that yes, there's definitely going to be a revaluation sector-wide to the downside at some point in 2019. I agree with that statement. I believe that the predictions, especially from institutional research desks that are suggesting this massive and almost universal uptake of recreational cannabis from legal sources to the direct detriment of illegal providers of cannabis, are vastly overstated, and we have no further to look than Colorado to see that 5 years after the onset of recreational cannabis sales in Colorado, as of last year, still 27 to 28% of marijuana was being sourced from black market sources or from illegitimate sources. So essentially, almost a third of the cannabis being sold for recreational purposes is still being sourced from illegitimate sources. Now, in Canada, we have been historically even more lax on enforcement and especially on penalizing people who deal weed illegally, to the point where part of the impetus to go legal recreationally, I'm sure, comes from the fact that the cops just aren't busting people anymore in Canada for growing weed, because by the time it gets to court, most of the judges are psychologically aligned with the idea that throwing somebody in jail for growing weed or selling weed is net more harmful to society as a whole than it is, and to just sort of live with the fact that this is a plant, this is a garden product, this is an agricultural product. I believe at some point in the future we're going to look back at this idea that we can regulate who grows what in any way, be it opium or coca or cannabis, and sort of chuckle at how naive we were to think that was a thing. So, in a very convoluted way, what I'm saying is, yes, I think the downside valuations are coming. I think that the illegitimate dispensaries are going to remain strong. I think the government's going to find itself backed into a corner where they're going to have to find a way to bring the black markets into a legitimate sort of state.
Yep.
Because otherwise what they're risking is major social upheaval. If they're going to go against a segment of society whose only crime is that they're selling cannabis illegally, well, we're right back at the beginning of this whole cannabis revolution. That was the whole idea here, is that let's legalize something that is more socially harmful in a convicting environment as opposed to a socially accepting one. And that's like beyond two steps back. That's like undermining the entire social sort of impetus.
Well, I think is there not court challenges going on right now with some of the dispensaries that are taking place and declaring this, or at least they're arguing that it's unconstitutional to take away livelihoods? They've been operating for a prolonged period of time without trouble, and they're wondering why, or the constitutionality of legalization kicking them out of business, even though that they've been operating in sort of a quasi, illegal environment. So I'm not sure how that's going to play out. That might have some influence or not, to the effect.
Yeah.
Maybe perhaps.
Well, the court cases on the constitutional grounds, the 42% of the cases from all the dispensaries that were busted in Ontario last year were thrown out before they got to court because they were concerned about the challenges on constitutional grounds.
Okay.
I can't answer the question as to whether there are active challenges on constitutional grounds in the court system now, either on the Ontario Supreme Court level or the federal Supreme Court. However, we do have a research exercise going on right now to figure out exactly what is happening with all of those cases from last year. Preliminary research tells us that the dispensaries that were selling to kids are the ones whose cases have proceeded to be tried and convicted. If you weren't selling to minors, basically you were left alone. And so that's kind of where the unofficial line has been drawn in the law system. So, but does that equal better risk reward return in the near term in the United States? Here's the thing in the United States is that when it starts to come on strong, the US is so much more saturated with underground grows that the price competition on cannabis is going to be relentless. And we've already seen the industry stumble in Oregon and Washington. And if you look at the first Canadian companies that are still multi-state in even Oregon and Washington, their valuations are not there. And yes, we do have these big monsters coming to market like MedMen, that's actually sponsored and put together by a bunch of private equity and or mutual fund guys. So, I mean, they know how to drive a market. And even, egregious share structure notwithstanding, the stock is still holding a $2 billion plus valuation. So I don't think that the equation is that the US equals a better risk reward in the near term. I think just like Canada, there are going to be extremely profitable investments based on selective exposure to companies that have a lot more going on for them and that are a lot more aggressive in execution than others. And it's going to be a selective market. So that was a long-winded answer. Boy, if we give that long an answer to every question on Reddit, we're going to be here till like Thursday.
Does somebody have to transcript that answer?
Yeah,
that might just take a couple hours on its own. No?
Yeah, well, that's what I'm thinking. I know that Joanna Govina is going to be transcribing this. She's probably going to hate us because she's going to be like, "What? I didn't sign up for this." Anyways, let's keep going here. Actually, I'm going to quickly jump over to our YouTube channel because I don't want them to be left out. Active discussion going on. GTI, Canna Brands, Canna Coin. One user is asking about, that's Justin. They're in the US bringing back blockchain into this industry. Well, boy, we could go there. If I had a nickel for every blockchain deal I had on my desk. Okay, there's a lot of Green Thumb. Okay. Was it Green Thumb Industries that James mentioned earlier who gave the 240-acre grow operation? No, that was Crop Infrastructure Corp. Symbol CROP on a Canadian exchange. I'm invested in Hemp Inc. Is Hexo a good buy? We're taking a break from the AMA just to tend to our users on YouTube because we don't want them to feel left out. So Hexo, let's see, is Hexo a buy? Well, Ben will give you the technical response to that. I will give you the fundamental response to that. Again, it's just our opinions. I can safely disclose that Hexo is neither a client nor a portfolio holding of any entity I'm affiliated with. Do you own any Hexo?
I do not.
Okay, so let's go pull up the Hexo chart. Just taking a little quick break from the AMA over there on Hexo. Let's punch them in and let's see what we got here. Da-da-da-da. There we go. Wow, been a bit of a sell-off, but that's pretty much a reflection of the market.
Yeah, I think so.
What does that tell you? Look at that.
Well, Hexo is a name I keep close tabs with. I've written about and I've thought that they might be a suitable partner in any potential Molson Coors deal, them and Apria being sort of 1A, 1B.
Yep.
So I've been watching their chart closely to see if there's any signs or the market is pricing in any signs that there might be something there. I don't see it personally. I think the price action is following much of what the sector is doing. It's not really underperforming or outperforming. It's just sort of following, what the sector is doing at large, led by cannabis. Recent weakness going back a couple weeks. So.
Okay, well, I know we've been to Hydropothecary's operations in Quebec with the film crew, and we were pretty impressed with how much space they had and how much they had going on. To call one company a buy and another one not at this point, apart from either an egregious share structure or a notorious management team, of which there aren't too many companies in the cannabis space in reality, we're not permitted by law to make calls on performance. And in fact, we have to avoid that. Will the stock go up? that's again a case of relative perspective from where you stand in the timeline. Chances are they'll all go up. Chances are they'll all go down. I guess that's a useless answer, so I won't pursue it anymore. We now take you back to our scheduled AMA question and answer period, which technically should have just begun now. Ben, can you imagine doing this for the next hour and a half?
I can. I'm immersed in it, so
Okay.
I have no choice to imagine.
So you're okay with it?
Yeah, absolutely.
Great.
My pleasure to answer the questions up there.
Okay, let's see. More questions. Next one, 3 days ago from Look at Me Today. There are a lot of doom and gloom predictions regarding post-legalization valuations. What do you think will happen to the large cap cannabis stocks after October? Okay, that's a pretty focused question.
Yeah, it's pretty focused. I think we touched on that a little bit.
Yeah.
Again, personal opinion without obviously making any acute projections. I think the large cap space looks great. I don't think legalization is really going to affect it. I mean, there's a lot of operating history that's happened in Colorado and in other jurisdictions, state jurisdictions. So we know basically how it's going to play out. Whether the Canadian market's $5 billion in the first year, 4.5 billion, give or take, a few hundred million based on how the illicit market goes. I think that aside, it's pretty predictable how much it's going to play out. So if you're the large cap space, if you're the Canopy Grows, Aurora Cannabises, and you have the largest offtake agreements, and you have the best shelf space, and you have all these international markets coming into play gradually over time, and you have the team to develop all these refined products to become, to drive first to market, the higher margin products. I don't think legalization, the actual timelines, is going to be that problematic. Going back to the BMO report, they're pricing in, and those are pretty smart, CFAs over there who wrote the report.
Yeah.
They have a pretty good indication of how much revenues are going to be, at the end of 2020 fiscal quarter for Canopy, for example, in Africa. So I think it's going to be in that ballpark. Okay. So I don't think legalization is going to really affect that because we already have operating models in different states and different places in the world.
Yeah, here's an interesting question. If Canopy Growth Corp, whose current valuation is, let's see, 8.16 billion, if they were a beer company, what would their annual sales have to be to justify an $8.16 billion market cap?
It would have to be a lot higher than 22 million in the previous quarter. But it all comes down to growth rate. It all comes down to opportunity that's out there. See, the problem with a lot of the CPGs in the brewing space and the spirit space is that, and some of them have actually done pretty well. The Constellation brands have done pretty well over the last 24 months. Yeah. I think Sam's Brewing Company has done pretty well too. Boston Sam's, the one you brought up earlier.
Yeah. Samuel
Adams. That's done really well over time as well. So I think, but the revenue generation in that industry is very limited. As we saw with Molson Coors when they went down in May after their earnings report, I think they went down in 10 years. They had the worst trading day.
Oh, really?
It has had growth that was very flat across the board all around the world. And those trends have been decades in the making. So there's no growth structure there. And that's why they're looking, potentially exploring getting into the cannabis space to boost that growth. So Canopy is not like that. I think with all these markets coming online, a wealth of undiscovered products yet to be introduced. There's so much growth in the pipeline that, they have 23 million revenues today and they're worth 8 billion, huge disparity, if you're just looking in isolation, but you can't because the revenue number is going to grow drastically.
If we go back to the question about Samuel Adams Brewery, which was interesting, where did it go? How do you compare a company like Sam Adams, Boston Beer Company, sorry, it's not Sam Adams, I don't know why I said that, to 2017 revenue of 921 million with a market cap of 2.7 billion. So 3 times 2.7 billion is $8.1 billion. So what you could say that in order for Canopy to justify an $8.1 billion valuation, if it was a beer company, it would have to have $2.7 billion in revenue.
I think it also depends on their growth rate at the time. But yeah, that aside, for sure. But I think they're projected, Bank of Montreal projects 1.2 billion, I think, at the end of their
For
fiscal
Canopy?
quarter for Canopy at the end of 2020.
Bearing in mind how much money has BMO invested into Canopy growth?
You know what? I'm not sure about the answer to that question. I know they did some work on them as
Yeah.
an agent.
Yeah.
So I'm not sure if that agreement is still there.
Oh,
but they're projecting about $1.2 billion at the end of their fiscal quarter, which ends, I believe, at the end of March. So they're thinking $1.2 billion in the pipeline in the next, say, 6 quarters or 7 quarters. So if they're right, it should be coming close to that mark by the end of, say, 2020.
You bet. The other thing you got to keep in mind here is I don't think recreational is where the big market is. Personally, I don't. If you consider what the global sales are of all opiates and amphetamines, I mean, amphetamines, I don't think that there's a great deal of going to be a lot of displacement of the prescription amphetamine market, aka Adderall and Ritalin. So, especially Adderall and Ritalin, which are supposed to be attention deficit mitigators, marijuana tends to be an attention deficit enhancer. I can say from experience. So I don't see any displacement of that market by cannabinoids. However, if you consider all of the opiates, all of the opiate drugs, Percocet, Demerol, oxycodone, OxyContin.
Yep.
If all of those drugs are ultimately determined to be inferior to cannabinoids as pain mitigators, then 1.2 billion in the near term certainly makes sense to me, and 2.7 billion, 2.1 billion in the longer term also makes sense. So it's
that's the way I look at it. I look at it as not just the offtake agreements, what they're going to sell in cannabis. It's really the refined goods market, especially on the medical side. That's the way I look at it. And even though I think some people can't understand what the opportunity is because they don't see it yet, that projection comes into play where there's tons of qualified personnel behind the scenes that are looking for that new refined product that they're going to bring to market. So the only real companies with that R&D budget and scale to bring that to be would be the Canopies of the world, the Auroras. So I think that's going to be a huge market. Sleep apnea, things like that. That's largely undiscovered now, but has the potential to drive growth going forward.
Yeah, you bet. Okay, so let's take a couple more questions here. First off, many thanks for the amazing resource that you provide. Top-notch interviews with industry leaders. My cannabis portfolio is so much stronger because of insights gleaned from your conversations. Well, thank you for that, KBarbs4421. And her preferred slogan is, check ignition and make God's love be with you.
Oh, David Bowie fan.
David Bowie fan.
Perfect.
Yay!
Let's answer it.
Of all the CEOs or other C-suite folks you've interviewed, who impressed you the most and why? Who surprised you the most and why?
That's a question for you.
Wow. Who impressed me the most? Boy, that's a tough question. And, a few of these guys are I consider them friends, more or less. And, so like Vic Neufeld has always really impressed me because he's just such a, he's just lays it all out there.
Vic.
Exactly. He just bulldozes through any negativity, any skepticism. He's a real charismatic force. Cam Batley from Aurora is probably the most articulate and I would say
Camera friendly?
He's camera friendly, and he's also he's got all the facts right here, and he's also he's just a great guy. So I always have fun with Cam, and he's definitely a good friend. Brad Rogers from CanTrust is a sweet man. He's a true gentleman, and him and I go out and have a drink every once in a while because we have that kind of friendship. So he's really impressed me. Bruce Linton, I mean, come on, the guy comes from computer software firm background, and he finds himself at the helm of $1 billion company, which most importantly he hangs on to throughout the successive growth phases. Most companies by now, the startup CEO is certainly not the mature
NCO.
billion-dollar unicorn CEO. That's an evolution. Look at Google. I mean, we're not comparing Canopy to Google because Canopy is a much nicer company and a better place to work, and Google's this behemoth monster that's the bane of our existences because they give us poor showings in the search results. But Bruce Linton is a guy who's like I mean, come on, that guy's like, I can't believe it. He did his first BNN interview, showed up in a black leather jacket and a t-shirt, which was a pretty ballsy move on his part. So, but the bottom line is, like, John Fowler's another guy who springs to mind. I mean, here's this guy's a lawyer, and yet he's probably one of the coolest guys I know in terms of taking on the market and focusing on he's focused on the premium dried flower. He's a real advocate for that. So,
could I throw one name for you?
Absolutely.
I've only done a few interviews. I'm sort of a novice in this, but Keith Merker from WebMD, very smooth interview.
Yeah.
Great to talk to.
Great.
Terrific interviewer.
Yeah, he's a guy who also I could talk to him for hours and hours and hours. But the bottom line is, and I'm sorry to be so inconclusive, but I couldn't say. I mean, and I do have to observe a level of diplomacy here. I couldn't say that anyone has necessarily impressed me like by far and away from the others. I mean, Canadians are great people generally. What can I say? And so, the range of let's just say that there are no cannabis company guys who I've talked to who I think are in any way bad people. There's a bunch that I haven't had on the show who I'm not impressed with, and that's why they're not on the show, and they're not going to be on the show. Even Mike Gorenstein, he's not Canadian, he's an American, but another great guy who's just so down to earth, and who's I couldn't say that one's more favorite than more impressed than the other. There are some that I can talk to more. I find the bidirectionality of the conversation with Cam Batley is something that I enjoy more so than more of the monologuing that some of the other CEOs subject myself and our audience to. And but we just have to deal with that because we want them to come back and feel like they've got a place to talk. Increasingly, we saw Bruce Linton on Mad Money with Jim Cramer on CNBC in the United States now for the second time this week. And does that mean he's finished with Midas Letter and BNN, Bloomberg? I don't think so. Bruce will be back here repeatedly. In fact, we're going to a number of events with Canopy this year. We're going to be visiting their Niagara facility. We're going to be visiting their BC facility this summer. And we're going to be talking to Bruce on camera at a very special event later this summer, which we're not going to talk about quite yet. So I'm sorry if that's an inconclusive answer. They're all impressive. Who surprised me the most and why? I really can't say that anybody's really surprised me that much. Actually, I would say Cam Batley surprised me as much because he's just such an open and available individual. He's a guy who I can call him up on my cell phone at any moment, and he'd answer the phone. He'd be, hey James, how's it going? Same with Brad Rogers. Very open, bi-directional conversations, not monologuers. So I really appreciate that in a guest, and that's all I'm going to say about that. Onward. Let's see. I hope you and KBarbs4421, we can have that conversation offline ad infinitum. I'd probably be a little bit more open about it if I wasn't talking to so many people right now. Okay, next question is from So Many Donuts. So Many Donuts. That's a great handle. It's been upvoted to 8 points. This is a question from 3 days ago. What lessons, if any, should retail investors take away from the January sector spike earlier this year? Take it away, Ben.
Sure.
What did you learn from that?
I didn't really have a big takeaway from that in terms of a lesson. I think we've seen it consistently of an early stage growth market going up in perhaps rising exuberantly and then coming down by a measured degree. So I don't know if there's a lesson per se in there. I think it's just a byproduct of early stage growth market, high volatility, what goes up must come down kind of scenario. So I don't know if there's a lesson to it. I think that's just the lesson of playing in a high alpha market that goes up a lot and then down a lot and is still it has a lot of entrenched volatility within.
Okay, well, I would agree with that a lot. The market is the market. I mean, that's just such a crazy thing to say. What lessons have you learned? Yeah, any bull market, any bubble market. I mean, and this is what cannabis is right now. It's a bubble. It's a bubble that's inflating. We're in the inflation phase, a little deflationary the last couple of weeks. But
is it still a bubble, though?
Is it still a bubble?
Would you consider it still a bubble right now?
Yeah, I would say it's definitely got all the main characteristic of a bubble is when a group of companies in a certain sector take on valuations that have no relationship to fundamental analysis. In other words, the balance sheet, the sales, the revenue, the enterprise value, the book value, when that's the symptom of a bubble from a fundamentalist perspective. So when I look at the stock spike that happened in January, let's remember what the catalysts for that were. In November, the government had gotten progressively more clear on its legalization message and had revealed a timeline that we could expect by June there'd be some clear decisions. We saw Constellation Brands buy 10% of Canopy Rivers, quickly followed by BMO investing $250 million at a valuation that was about a 20% premium to Canopy Growth's share price at the time. So all of those events catalyzed, an intensification of the mania, and we saw that spike. But just as in any spike in a market, whether it's driven by a fundamental real event like we're constantly drawn to use an analogy to mining companies in Canada because 50% of our collective entrepreneurial class companies are mining companies or were mining companies before crypto and cannabis came along. So we're constantly drawn to that analogy. Even when one of those companies who's been drilling and looking for large mineral deposits hits a drill result and the stock spikes, what always happens after the spike is the stock sells off because people made money, people bought in, and people take money off the table soon thereafter.
Or they use it for a bought deal. Of course, they take advantage of their soaring share price, use a bought deal, and then it gets a haircut.
Yeah, exactly.
Yeah. Saw a lot of that too, recently as well with CanTrust, for example. When it ran to $10, in the last say 4 or 5 weeks ago.
Right.
So I mean, that's not. It doesn't pertain to the question in terms of the bubble, but I think you're absolutely right.
Right.
The Constellation Brands in October getting together with Canopy, all these events started happening that catalyzed this huge stock spike, and it at the end of the day it was just a lot of air in that, and it was actually catalyzed by the New Strike deal as well when they were supposed to get together with CanAmed, and eventually Aurora bought CanAmed, and that was sort of the high of that bubble. So that was, I think it's just money deflating, people taking gains and moving on. And
I would say if there was a lesson to be learned, it's like when you see an increase in the M&A activity and the financing activity, and you start to see record financings, you can be assured that there will be an acceleration in the sector-wide that will lift all boats. And we certainly saw, if you look at any stock chart in the cannabis space, everything reflected that spike and the subsequent sell-off almost perfectly to varying degrees. So the lesson is you can make a lot of money in the short term on those things if you're a trader. And if you're an investor, that's probably the worst time to buy, because you're going to end up, if you're going to chase that spike, you're going to pay a lot. So there we go. Next question. Hope we answered that one. That one's a little bit clearer. Major Canadian producers are staking claims tangentially or with at least a degree of separation in order not to run afoul with regulators in U.S. producers and vertically integrated growers. Do you believe the U.S. market will eventually be dominated by the current players based in Canada? And that's a second question from So Many Donuts. So, I'm going to answer that one straight on because we've kind of danced around that question repeatedly throughout today's conversation, but I don't think the Canadians will dominate the American space at all. No, sir, not at all. I think Canada's opportunities are all outside of the United States, because when the Americans start to, here's the reality with anybody competing with America. Google dominates what people see when they search for something. Google has an algorithmic bias built into its system that prefers American commerce to Canadian. We see that in news publications. You see that in all cases. So if you're going to compete with America, forget it. Unless you're going to move there and present as an American corporation, that's your only hope. So I don't think Canadians have a chance. Canopy, perhaps. Aurora, perhaps. Afria, perhaps. Kronos, definitely. CanTrust, doubt it. But those top 4 companies, they can go into the United States, buy up assets, and start to present as a U.S. corporation and engage the Google algorithmic bias and trick it into thinking that they're Americans, because you need to be in America to create that algorithmic, to hook that algorithmic bias and trick the Google machine. That's the bottom line, really. Google determines who wins. Google is pro-America. The rest of the world suffers. That's not conspiracy theory. You can look it up, algorithmic bias in Google. So we don't really have a hope in hell in terms of competing in the US. The rest of the world, now we can. In fact, Aurora is going to be the largest exporter of medical cannabis into Germany. We know that. Into Europe, potentially, through their wholly owned subsidiary, Pendianos. Question is, when those countries go federally legal with medical and recreational strategies, aren't they going to want to be capturing their own economic opportunity inherent in such evolution of the legal and social contract? I think they will, and that's when I think, you're going to start to see Canadians get squeezed everywhere in the globe. I hope that answered that question. So, no, I don't believe that the U.S. market will eventually be dominated by current players. Do you have anything to add to that, Ben?
No, I agree wholeheartedly, except for the canopies, maybe cross-listed companies who have the ability to raise a lot of money and who have those deep connections with the institutional bankers down there. Yeah, but for the smaller players, anything from, say, 3 or 4 market cap below, forget about it.
Okay, I have a specifically targeted question here. Ennis5555 from weedstocks on Reddit says, James, how critical do you think the last 8 months of raising cash through stock or debt has been in monopolizing the market for the big 3? Will the cash hoard prove to be the final nail in the coffin for the global race, allowing for acquisition sprees in international markets for pennies on the dollar through cash or inflated stock prices? Okay, so I'm assuming that's in reference to the smaller companies. I think that we are seeing a chance, or we're seeing the emergence. If you look at the drift that's gone in the small cap companies over the last 2 weeks, and if you look at the sort of, I hate to use the cliche term bifurcation, but at least everybody knows what that refers to, between the large caps and the small caps, I think the last 8 months has been critical. In fact, for small companies, if you didn't get your big financing done before the onset of July, you're going to find yourself valued at much less, and a lot of companies are going to find themselves unable to raise capital at all. The doors are closed. In fact, I've had conversations with investment bankers in our neighborhood who have said, we're not interested in looking at any late stage applicants at all. You can't even get a meeting with them anymore unless you're like connected to the system somehow, you're a market participant, you might get a meeting, but you better have some major differentiator. You're not getting anything. If you are going to get finance, it's probably because you've got something attractive, like some unique real estate staked out or some unique product category. So was the last 8 months critical? Yeah, you bet it was. And is it the death knell for junior companies hoping to squeeze into the business? I think it was. Personally, I do. There are a few exceptions out there that are still private. And at this point in the evolution of a new market like cannabis, it's all about who can raise money who can make the market move. In other words, who knows how to promote a stock. And promoting a stock is not necessarily a bad thing. In fact, every good CEO owes it to their shareholders to promote the stock. The ones who think that, oh no, promotion's a bad word and we're just going to build a great company and they will come, those days are so gone. It's all about perception management. The companies who still think like that are going to find themselves exactly where the most recent ones in the mining space have done, who thought like that, unable to raise a nickel, unable to catch a bid in the share price, and ultimately becoming a shell for whatever the next new hot thing is. So yeah, that's it. It's the window is closing. It's closing fast. Not so much for U.S. ones, mind you, because that game is still coming on. And as was mentioned earlier, it's 10 times the market. All right, let's keep going here. So Many Donuts. There's another question from So Many Donuts. Mr. Donuts, if I might address you directly, sir, I'm going to answer your question on another occasion down the road, because we've answered 2 of yours and I want to try to be fair, assuming we have some other people asking questions here. So I'm going to look for questions first that I haven't seen from users we haven't seen before. Here's one from Stormtrooper12 on Reddit. Hey James and Ben, can you give your opinion on how first mover advantage into the beverage category for Tinley could possibly play out versus Canopy still developing their beverages, especially since Canopy has stated where they would only operate in jurisdiction where it is federally legal. What do you say, Ben?
Yeah, I think Tinley, I'm not an expert on the Tinley name by any stretch, but I do know something about the company, and I think that they're in they're in a positive space. Of course, they make those they make THC infused drinks and CBD infused drinks. Now, I would say that Tinley is not alcoholic beverage based, so that's where sort of the comparison ends. So yeah, do they have a future? Absolutely. I think THC, CBD infused drinks are going to be a mainstay in the market. So yes, I do. Now, because they're not alcoholic based, they're going to be in its own category, sort of like the Red Bulls of the world, that type of space. And do they have a chance to dominate that end of the market? Yeah, probably. I mean, they look good, they brand well. So I would say yes. My first impressions are, that they will do pretty well.
Okay, I'm going to disagree with Ben there. No offense, Ben.
Okay. Okay.
Tinley's a niche market player. They're in the States. They're in the States where competition is fierce. I believe they're in Nevada, Colorado, and California, if I'm not mistaken. I could be wrong there, but Tinley is a Canadian player. They've done very well, but I think that they are going to find themselves shut out of a lot of the sort of retail locations. At the end of the day, the beverage category is a consumer packaged goods category, and so they might be able to pull off some market share until it's federally legal and Canopy does come in. Canopy has said they would only operate in jurisdictions where it's federally legal, but Constellation Brands has not made any statement about where it might sell its products. And don't forget, it owns 10% of Canopy. And does it necessarily follow that Constellation Brands will just make Canopy their sole provider of beverages to the market globally? Or is it conceivable that Canopy will supply ingredients and or product components to beverage category or beverage products that are evolved through Constellation Brands? Nobody owns better retail real estate in liquor stores around America than Constellation Brands.
But Tinley is non-alcoholic, to my knowledge, based on what I know about the company. So is there a differentiation where Tinley might dominate, or not dominate per se, but might be a player in the non-alcoholic space, such as Red Bull, some of the energy drinks, that space, as opposed to the spirits and brewers? I don't know if there's a difference there. You probably know more about the company than I do.
Well, the bottom line is, in most states, in most counties, if you're going to sell a cannabis-infused beverage, it has to be in a dispensary or an otherwise licensed to sell marijuana products environment. So in that environment, you know, I don't know of any states that allow alcohol blended with marijuana at this point in a beverage. Is that day coming? Probably. I mean, the bottom line is if Tinley can continue to raise money and continue to exhibit a upward trajectory in its share price, which it has not been able to do, then yeah, it could buy market share. I mean, and that's what it comes down to. In a market that is saturated with product availability, you have to pay for market share in some way, shape, or form. Will Tinley be the one that lasts? I don't see it at this point, honestly. And, you know, could they build a brand that actually becomes one of the most popular brands? Absolutely possible. So I guess I'm going to say that I don't, my hope is not great for Tinley, you know, becoming a major beverage player in the cannabis space, but it's possible.
Can I throw out something, just an idea? Would you view Tinley as perhaps something of a buyout candidate from a player looking for quick access? If they want to get into that beverage space, the non-alcoholic beverage space with infusibles, would that be an attractive sort of buyout candidate? Or do you think companies would look more organically to develop their own brands and, you know, not spend that capital?
Well, I mean, the consolidation in the cannabis space, I mean, we've seen things happen that defy reason. And so it is entirely conceivable that Tinley actually gets bought out because of its position in the market. And so absolutely, that's a possibility. I actually have to say that I don't know enough about the company and its brands, and I certainly haven't looked at its financials to get a sense of how it's doing. We did see some news by them that I read earlier, but you know, it's just never struck me as a really strong contender, either in terms of, you know, access to capital, promotional, you know, firepower, or market share. So, but we'll see. I've been surprised in the past. Okay, so let's see here. K-Barbs has a question for you, Ben, and she opens it. She'd love to get a bit more color from you on this line of thinking, which she pulled from this. Well, I'm assuming it's a girl, but it could be a guy. Who knows? It could be a horse for all I know. The horses can't write, can they?
They can't write.
Okay. What about 2 free yes? I don't know. Even if Molson Coors partners up tomorrow, they presumably months behind the 8 ball in terms of R&D and logistics. While it isn't an insurmountable disadvantage to overcome, it can't be ideal. Listen to me editing on the fly here. Playing catch up from a trailing position rarely is. Thus, if Molson Coors really intends to JV with Aphria or someone else, the trigger point may be close at hand, because like everything else defining the cannabis growth cycle thus far, first to market advantage is key. When that advantage is procured by the best branding cannabis LP on the planet, it becomes practically insurmountable. Waiting any longer than necessary for Molson Coors to cement its own partnership does nothing but hinder their preparation in coming to market. I'd say I'd have to agree with that wholeheartedly. But then the question is, I struggle with the concept that the cannabis beverage landscape will be largely controlled by the first mover in the space, and that the current early mover advantage held by Canopy Constellation will be practically insurmountable. While the alcohol industry is an imperfect comparison for many reasons, it does serve as an example of the breadth and depth of brands and producers that can occupy a market. Why do you feel the cannabis beverage space is prone to become more of a monopoly? Just got you there.
Yeah. Okay, that's a very fair question, and I think there's some conflation to what I was trying to say in the article, in that quote. And I think a lot of people misunderstand what first mover advantage is. It doesn't mean that companies that are first in a market are going to procure a monopoly, right? It just means that they have all the advantages of financing, marketing, distribution, store shelves, and that's what Canopy, or the first company that comes to market with a brewery, with a commercially viable product, beer product infusable with THC, will bring. So it doesn't mean that Molson Coors, if they partner up with Aphria or someone else, won't obtain their own market share. It just means that first in mover, the person who produces the first commercially viable product is going to have, that media attention. It's going to be on the cover of, New York Times, Business Week. It's going to have, the best position on store shelves. It's going to be known as the iconic brand. So they're going to be the first brand that many people try. So it doesn't mean that the second, third, fifth, eighth, mover in the market still can't carve out their own niche or still can't procure market share. So I think, first in mover advantage, insurmountable in terms of, that product being the iconic brand and it gain all the attention and having all the advantages of marketing and distribution. So that's what that comment meant, and that's what first in mover advantage is generally. It doesn't mean a monopoly, it just means they have all the advantages that, upfront positioning, entails.
Okay. That's a good answer. Next question is actually, I'm going to read it out even though one might argue that it's not relevant to our conversation until the last question. And I like it because it reminds me of the old days when we were all mining people. Anyways, the question is from an entity called Superior Colonial Flip.
Wow.
That is a mouthful. And they're asking, what are your views on precious metals, especially gold and silver, and how will the Fed rate hikes affect gold and silver? Do you also expect the Fed to overshoot and send us into a recession in a couple of years, like Morgan Stanley has stated and a few other hedge fund managers? If so, what sectors will you be looking to invest in brackets, oil or cash? How do you think a recession will affect the marijuana sector?
That's a loaded question.
Yeah, well, what do I think about precious metals, especially gold and silver? I think that the portion of the population that has been represented in generation after generation of the libertarian, somewhat, off-grid, anti-authority mindset that has embraced gold and silver in the past as real money has now been hijacked by the whole cryptocurrency movement. And so I think all of the normal momentum and the normal dynamics that affect gold and silver pricing relative to things like the Fed funds rate hike is absent and gone for at least the foreseeable future. So my answer to that question is, what's my views on precious metals, gold and silver? Right now, who cares? Who cares? Nobody cares, and I don't see that the Fed rate hike is going to have an effect on gold and silver anytime soon. Will the Fed overshoot? Of course, it always overshoots. Will it send us into recession? Yes, it will, because that is very much along the line within the interests of the macro banking sector generally. When recession occurs, defaults occur, balance sheets grow on the big banks. That's how big banks get bigger, as they buy government influence and they catalyze volatility in markets so that they can cause wealth transfer in society at large. That's the scam of big banking. I think that at some point there's going to be a complete sort of, disinterest will grip the cannabis industry as an industry on its own in due course. Is it going to be 2020, 2021, 2022, 2023? Who knows? There's a lot of growth catalysts coming from the medical side. We saw the first FDA licensed cannabis drug. So if you're asking me where will I be an investor, oil or cash, neither of those are very promising investments to me. In the long term, actually, I think there's a accelerating short-term trade in oil, based on the fact that it's been sub $60 for a year and a half, 2 years, and so there was no exploration, drilling, or development. Cash, I generally am never in cash. Why? Because I'm not an investor who is governed by the normal sort of risk tolerance sort of limitations of most. I have no children to put through school. I have zero fear of losing everything because I've done it so many times that I actually enjoy it. So I'm essentially what's considered a crazy person in the market. So there's that. So if you're asking me what will I be an investor in, I probably couldn't tell you because I can't see what the future holds, but chances are there's going to be some new sector that we're not really looking at closely. There's growing interest. There's a potential for robotics. There's the potentiality that we're all going to have our own robot. There's these lithium-powered flying machines that seat 5. You don't need to know how to fly. They're complete fly-by-wire. They're powered by lithium-ion batteries, 300 kilometers in 300 kilometers in 2 hours at 300 kilometers an hour.
What am I doing paying Air Canada?
Yeah, well, exactly.
Why am I paying $1,500 for a flight to?
Well, we're not there yet. Now, there's some kinks to be worked out, and I certainly don't want to be one of the test passengers on that product. But that's, these are all sort of burgeoning, potential, exploding future bubbles that, we can't see which one is going to leap into the forefront of the popular investor imagination and catalyze the next bull market. I can't tell you. I think it was Yogi Berra who said, it's okay to predict the future, just don't say when. That's my attitude. Yeah, the future, it's going to be great. It's going to go up, it's going to go down. Okay, so let's see. Here's another one. Troll Bear Pig What? Troll Bear Pig What is the handle. That's an interesting one. Do you have an ETA for video tours of Aurora, Aphria, or any other greenhouse? The on-site interviews are my favorite. Really look forward to them, especially for these highly automated facilities. Well, Trolling Bear Pig What, dude? Have I got an answer for you? We're shooting Canopy multi-site in August. We're probably going to get Aphria in, I'm thinking this month. We might get out to Leamington again. Aurora, we will be shooting Aurora Sky probably September, probably August. We'll be shooting Aurora Sun closer to its commissioning, and Aurora will probably be seeing a lot of. So we're going to be covering the big 3 because they're going to start to break away in terms of performance and the whole other market, and that's going to be a whole other sector unto itself. And ultimately, I see either those 3 getting absorbed by some other bigger entity in either pharma, tobacco, or alcohol, or one of them starting to partner up with a major institution like BlackRock or who knows who else, and becoming consolidators. But yeah, we're gonna have tours of all 3 of those, probably ready to go out on our channel starting in September. That's an easy question to answer. Keep up the good work. He says, thank you very much. CPAD, and Dreamer. CPAD, wow, that's interesting. That word could be interpreted several ways. In terms of the overall market, some analysts and indicators point to a correction, possible recession coming up in 2019 or 2020. This year, the stable bull market has certainly been replaced by a more volatile one, resulting in a decreasing risk appetite among some investors. Where do you guys see the overall market going, and how do you see it affecting MJ stocks in Canada, in the US, respectively? With a background in mining, I'm curious if you, James, are again considering dipping your toes in some safe haven hedging bets like gold mines, or if you are sticking it out 100% with cannabis through better or worse. I'll pick up that question first. I'm going to start at the end and go backwards because then we'll bring Ben in on the conversation. But I am already buying mining companies. I am already a holder in copper, and I am invested in some gold and silver exploration. I am very much positioning in cobalt and lithium. So that process is already underway. I will never be 100% in any sector. Never, never, never. In fact, and I learned to never be 100% any sector because I was 100% the mining sector in 2010, 11, and 12 and got completely wiped out. So that was the lesson there. There you have it. So then, for better, for worse. No, so I won't be sticking with Canada for better or worse. I will be the first to jump ship. In fact, there is going to be a great opportunity for the guys with big cojones and big pockets to shoot the short play when it all goes pear-shaped. And I'm not talking upside down pear-shaped that Ben was referring to earlier. I'm talking the pear-shaped where it all goes sideways, and that day is coming. The run for the hills, the bursting of the bubble, that is coming. And no, I won't be there holding the bag for like I did for the mining space. So yeah, I'm already in mining. I mean, I'm looking for cannabis to be, sort of become less frothy. I'm looking for the bloom to come off the rose gradually as it becomes more of a mainstream market. That is going to happen. 2020 is, I believe, when we're going to start to see that start to happen. So in the near term, I'm still mostly bullish on cannabis. Okay, moving right along. Oh, sorry, Ben, did you want to add to that?
Yeah, I think I pretty much agree with everything that you said in terms of I think there's still a few quarters to play out on the cannabis side, and there's still quite a little bit of upside with some of the bigger players like Aurora and Canopy and Afria on the top end. I really still think that there's still a good opportunity for longer term horizon investors, because there's so much that hasn't been uncovered, so many markets which haven't been exploited, and so many refined products which are still going to come to market over the next 2-3 years. So yeah, absolutely.
Yeah, and in terms of actually just to dwell on that question a little bit further, in terms of a recession in 2019 or 2020, if you consider the multiple fronts of trade war that the big idiot president to the south has opened up. Sorry, did I say that about a president of the United States? Yes, I did. In terms of the fact that there is a rampant liar in the White House threatening to catalyze a recession on so many ways, the reality is most of the world doesn't take this president seriously any at all anymore. I mean, apart from the fact that he's got fingers on nuclear buttons and commands a giant army, even he can't even get, his guys would, I bet you a general would shoot him in the head before he'd pull a button if that president ordered it. The guy's off his rocker. So, and in business especially, where rationality is a prerequisite of growth, I don't think that the presidential sort of instability is sufficient to catalyze a recession. And in fact, if you look at the fact that there are $800 billion in stock buybacks planned in the Fortune 500, still planned for 2018, indicating that these companies are still going to take advantage of cheap money to buy back stock and to improve returns to shareholders that way, which will in turn influence shareholders to continue to hold and accumulate these stocks. I mean, a recession certainly not coming anytime soon in the stock market. A general recession globally on the macroeconomic front, I don't think so. I think you're going to start to see confidence shaken slightly in markets who depend on the U.S. for trade because of real President Idiot in the White House. At the end of the day, nobody really takes the guy seriously. Everybody knows his days are numbered, whether it's prison or just obscurity or suicide or assassination. I mean, there's really not much to worry about there. So, recession is not really something to worry about despite all the indicators.
Well, the thing is, I might add just, my observations about the market right now, it's obviously very hot. The economy's, growing at a very fast pace. And to
3% U.S. this year expected.
Yeah, and that's the fastest pace.
Donald Trump's trying to take credit for that, by the way.
Well, whether it's Trump or not, I'll stay out of that conversation. We might have different views on that. But, the growth is very strong right now, and it's happening right at the end of the cycle. And the cycle basically began late 2008, after the advent of the U.S. recession. So to me, this kind of reminds me of 2000, late stage 2001 during the tech cycle, where growth started to elevate at the highs right before recession actually took place. So if you look at the yield curve, the spread between 2 and 10-year bond spreads, it's only 28 basis points. And I think the yield curve inversion is called the last 9 recessions. Now I understand this is weed stocks, and I might be going off topic, but at the end of the day, even though growth is strong and nothing really points to that, with the potential trade wars going on with the U.S. and China and other countries, I think there's a possibility that recession could be 3-4 quarters away, even though no one sees it right now. Sort of what happened in past cycles. And if it is, gold stocks, some mining stocks, for back to the previous question, gold, silver stocks, halfway through the recession or nearing the end, when a new round of monetization comes aboard. And it could be a very good opportunity for gold stocks during that time. So I fully anticipate, assuming that we, the financial network here grows and so forth, and I'm still writing and we're still hosting, that gold might be part of the conversation. It just no one cares right now, like you said.
Okay. Just to cut back to our loyal followers on YouTube a bit, I don't want them to feel ignored. A gentleman named Mike Smeltzer wanted to point out that Tinley is actually making drinks that are alcoholic flavor but no alcohol in them. Margarita, cooler, coconut rum, etc.
I did not know that. Thank you.
Let's see. Freedom Unleashed says, James, just give up who you weren't impressed with. Getting back to that question about who's the most impressive guest or whatever. So let's see. The guy who I've been most unimpressed with has never been a guest, nor will he be. Okay, so Modern Picasso says, wow, you folks are still on. I know, we're having a hard time to believing it too. All right, so let's go back to our Reddit list. Let's see, how far through are we? Actually, you know what, Ben? We are really making headway. So we're actually going to be finished early at 5:30 with this. So can you believe that? That's great. Okay, so getting back to some of the questions here. Do you have an ETA? We already did that one. In terms of the overall market, some analysts point to, we already did that one. No real question. Big thanks for the interviews. Hey, you're welcome. Thank you. Dave Smash Wall. I like that. Hello. Do you expect money to exit the Canadian sector and have new money enter the U.S. market for emerging cannabis companies? The r/US weed stocks community was also wondering this. Glad the R weed stocks could have this AMA. Hey, Dave Smashwell, that's a great question, and I'm going to give you my opinion first, because then Ben will give you his, because chances are we won't agree, but we might. I think in that when federal deprohibition hits the U.S., it will have a huge sucking effect on the Canadian capital markets, and I think a lot of the money will go hunting in the United States. Absolutely, because that's where 10x market share is going to be carved out. There will be at least 3 to 5 big Canadian companies who are in that ring, and they're going to be cashed up, and they're going to be lethal. So there will be, I think a lot of the Canadian money is going to abandon any thought of investing any further in any Canadian juniors, especially post October 17th, 2020, or rather 2018, because now we're going to start to see the performance of the recreational sector on the balance sheets of all these companies in Canada. Pretty sure the big companies are going to see the lion's share because their balance sheet are going to be augmented by international sales because of their international footprints. Pretty sure all the small companies are going to be a big oh my gosh, who thought it would be so bad for them, especially when the illegitimate sources of cannabis in Canada continue to supply the market in very large part. Again, just my opinion, but I'm looking at Colorado, who still 5 years later is looking at 30% supply from the dark side. There, that was a good answer. Glenn, do you have anything to add to that one?
Yeah, I would circle back and say that small caps in the United States, I agree that there has potential for a lot of outflows in investor money to the American side when legalization occurs. Of course, the market is 10 times larger, and it's largely untapped. And not only that, valuations are much lower, as we've heard before from Alan Brockstein and other people. So valuations are much lower, so it's a much more attractive market on a valuation basis right now. So I think you could has potential to see that large sucking sound if legalization does occur, sometime in the future. Mm-hmm. I'd like to add too, just sort of a sidebar to the question, that you're saying that, and I agree, 100% with you, that the 3 to 5 largest Canadian LPs are going to, obviously they're going to survive on their balance sheet. They're going to have, they're going to be cashed up. They're going to be ready to go. But I'm not sure that the market is appreciating the opportunity that post legalization is going to have with them acquiring some of the assets of some of the smaller LPs, into 2019, once we start seeing their balance sheet and how bad it looks, especially ones without offtake MOUs or the products not moving from the shelves. So there's a potential for the the Afrias and the Canopies and so forth to acquire some of these LPs that that can't survive on their balance sheet, and they're just looking to get out. And there's going to be a lot of assets on the Canadian realm and the Canadian space that might be had for, I don't know about pennies on the dollar, but definitely a lot cheaper than they're valued now. So it could be time early 2019 for some of the larger LPs to go shopping and get even bigger and acquire more of the wealth. I don't know if you.
Yeah, no, that's a good point. That's a good point. There is going to be a consolidation coming. I think especially if there are juniors out there who have been stockpiling cannabis in anticipation of this big market that doesn't materialize, then they can't sell it, they can't raise more money, and then the big LPs are going to start to look around for little juniors that have stockpiled a whole bunch of cannabis.
Yep.
They'll be like, well, there's some cannabis for pennies on the dollar. So that'll be a bump to their balance sheet. Okay. Post-legalization in a couple of months. This question's from Peristocrat. I like that, Peristocrat. That's an easy one. That's a good one. Blah, blah, blah. Not that everybody else's handles isn't good. I'm not criticizing. I kind of am, but I'm not. Post-legalization in a couple months, would you think there's much more room left for growth in share value, or are things pretty much priced in for the next year or so? Well, we've kind of been here.
Yeah,
And,
we've kind of been here.
In the next couple of months, though. Or in a couple of months. The next value catalyst in the cannabis space generally is the onset and availability of cannabis for recreational access to Canadians. Is that going to catalyze an accumulation phase in the Canadian stocks? I think there will be a bit of accumulation, especially as the summer doldrums come to an end. And people are going to start looking for stocks to buy in September, absolutely. But I don't think it's going to be meaningful because most of the money is going to be saying, well, let's wait to see how this looks on the balance sheet of these companies, and that you're not going to see till Q1 2019. So there you go. No, I don't think you're going to see much share value.
You know what? I'd have to agree with you there because it's about, again, it goes back to what drives the market, what has been driving the market historically, even though it's only 3-4 years in, it's been the news flow. So really, if we're looking to that catalyst before, it was, will legalization happen? In pre-January this year, it was, the Constellation Brands, it was the government, producing a framework that looked like legalization would take place. So there's always been that news flow. But right now, it's sort of hard to see where that news flow is coming from and where that catalyst or event will come from to really drive prices higher. Yep. So that's why I think we're seeing, they say never short a dull market, but in the lack of real, quantifying or quality news flow, people are selling, voting with their wallets and selling shares. So, come October 17th, a known parameter, is there anything before then that's going to, make everybody rush in? It's kind of hard to see at this point, but then again, it's the market and you never know, right?
Good point. Well said. Okay. Oh boy, a lot more questions have arrived. Okay, so we're not that done. Okay, so selling lower. There's a nice handle. There's a real optimistic handle. Canada is the first of the G7 to legalize recreational use marijuana. James, what's your bet? When will others follow? And when will Canadian companies rule the cannabis world? Well, that question is almost so ridiculous. I'm not even going to answer that. But when will other countries follow with legalized rec cannabis? That's, I can't pretend to be so up on the legislative processes in every country in the world. Certainly the countries that are, historically associated with liberal-minded populations, those are the ones I would expect would go, the next ones to go legal for rec. I think there's a lot of the countries in the G7 are observing Canada to see what happens here. In terms of the US, that's a wild card. Never know. Could be in 3 months, could be in 3 years, just no way to tell. Let's see, what else here? All right. There's another question. How long before most family doctors are prescribing medical MJ? Are we expecting edibles to be legal within the promised 1 year? There are hundreds of ACMPR applicants in the queue. How many will survive? Wow, that clever person managed to slip 3 questions into one post. I don't know if we like that. Okay, so this is from I'm a cat doing cat stuff. I'm a cat doing cat stuff. That's a good one.
It's a great handle.
That's meow. I guess that's what cats do. They ask three questions in one post.
They have 7 lives. 3 lives.
Okay, how long before most family doctors are prescribing medical MJ? I don't know. You'd have to ask them. Number 2, are we expecting edibles in the legal within the promised 1 year? Yes. Would you say yes?
Yeah, I would say yes, but I think it depends. Like, for example, are you going to combine edibles with alcohol? It depends what you combine it with.
They're just saying edibles. They're just wondering if...
just straight edibles? No.
Yeah, the government's made the commitment that they are going to make edibles legal within a year.
Yes.
Yes. Our government has been very consistent with their messaging and consistent with their follow-through on all things cannabis. So I would bet that they make edibles legal before a year is passed after this October 17th deadline.
As long as they're not combined with any, other component, it's just innocuous components, yes.
Right.
Definitely.
Okay, and then there's hundreds of ACMPR applicants in the queue. How many will survive? None. They're all gone. I mean, there might be a few who've got deep pockets privately or with an association with another industry that's trying to get in. But in terms of a new ACMPR listed company that hasn't got any money and has got this great idea that they're going to grow 15,000 square feet and then raise another 60 million bucks and go to phase 2 and then raise another 150 million and go to phase, that ship has sailed, people. Those days are over. That market is done. There are some companies that are still late-stage ACMPR applicants who will have differentiators. I know of one that is expecting a license that has 122,000 square foot GMP pharmaceutical plant. Those are the kinds of things that could still come to market and be contenders. There are some that are great at building brands. Yes, there may be a few, but how many will survive? Very few. Okay, from Wheels. Passive aggressive, he calls himself. Well, that's comforting. What are your thoughts on investing in merchant bank stocks such as QCA, that's Quinsam, I believe, Quinsam Capital, versus traditional LPs? Okay, well, Quinsam Capital is a repurposed company that had failed to achieve a qualifying transaction over, I think, almost 12 years and was subsequently taken over by one of the shareholders, Roger Dent, who now runs the company, who has sort of configured the company as a cannabis merchant bank. Roger is certainly no dummy, and he's got a great track record. So if you look at what they bought and you look at their press releases, he's already making that portfolio worth more. So a guy who's inside the market, like Roger, who can get access to early stage opportunities that are sort of the more favored deals coming to market, they'll do very well. I mean, if we look at, I guess, Canada Royalty was the original sort of merchant bank structure. Canada Royalty, Ianthus, those guys they're knocking it out of the park. All right, so moving right along. How important do you think cost per gram for LPs is right now, given the lack of standards across the industry on how this is or is not calculated? Cheers. This is from an individual calling themselves Control 8131. How important is cost per gram, Ben? What do you think?
Well, if you're listening to some of the CEOs out there, I think they want to get away from that. I believe it was Bruce or Cam Batley was talking about maybe not looking at cost per gram as being the
relevant metric?
Yeah, the relevant metric. John Fowler the other day in the Midas Letter interview, he was mentioning the same thing. So I think there's a lot of will from the CEO community, if you will, to calculate it in a different way, maybe based on actual terpene components or THC CBD components and how much you're getting in each gram. So potentially, yeah, I could see it potentially changing over and being a new metric being the standard. I'm
Yeah.
not sure though. I'm not sure what what's planned out there with the CFAs out there.
Well, cost per gram is relative to the bottom line and your ability to continue as a going concern, as long as there's not a frothy investment market mania supporting valuations that make no sense. So is cost per gram that important right now? Not right now. No, it's not important at all. And especially if we look at the experience of, say, Colorado in the recreational space, who's the longest duration recreational market in North America. In Colorado, the bunk, the cheap stuff, there's a lot of price competition there. Price per gram counts, yeah, but where there hasn't been any price competition is in the super premium flower, where the connoisseur grade flower. I mean, it's just a reality that there are a handful of super talented growers who can turn out a consistent product and do so every time. And that product is still getting $28 a gram to $32 a gram in some markets. In some stores, like if you look at MedMen, who have spent a lot on the environment in the retail space, you can't say for sure exactly, how important cost per gram is going to be, because they're writing a retail margin. They own the retail margin. And so for the vertically integrated ones, cost per gram is going to be less important relative to market share and gross margin on the retail. So in a convoluted way, again, I hope we've answered your question. But yeah, right now it doesn't matter much at all because everybody's still raising money on the back of the mania. But at some point it'll start to matter a lot more.
Okay, perhaps I can answer a follow-up question to that. Do you see the niche market, the premium market, organic market maintaining their margins, or having the ability to keep $28 a gram, $30 a gram, $20 a gram, or do you see the price compression hitting them as well as as the shortage that may alleviate after 2019 finally takes hold, or do you?
Well, in this super premium category, like there's not a single large Canadian corporate company, I don't believe, that could hang its entire business future on super premium category. The connoisseur market, the people willing to pay $28 a gram for that latest Aurora Frost or Spectrum Kush that's pushing 36% THC. That's a small market, and those super premium consumers as a group in the cannabis space are very small. For most people, for like myself included, I mean, I could see an occasion where I'd want to smoke the very best bud in the world, but honestly, I don't smoke a lot of marijuana anymore like I used to. And so for me, it's like if we're at a party and it's for some reason I feel like, okay, I'm going to have a hit because I'm feeling great and everybody's doing great, then I don't even care. As long as it's not laced with fentanyl, I'm good. As long as it's decent marijuana, that's good enough for me. So, and you'll find that with almost everybody. Sure, some people want to have some of that absolute, Bugatti Kush tucked away for that special occasion, if they're real connoisseurs or if they've got people in their universe who are connoisseurs that they want to impress when they're over. But generally, that's not sustainable. No, I don't think it's sustainable. For the small craft grower who focuses on that, who's got a small operation, super low overhead, super low cost per gram, yeah, that's going to be sustainable, and that's going to be their bread and butter. And those guys who have had that market share are going to probably keep that market share. So it's also very tough to break into. Okay, keeping going here. Blah, blah, blah. Okay, we are going to go to 6 o'clock. How about that? Because there are a ton more questions than I thought. James/Smith. Oh, I get first name, you get last name.
I get last name basis.
Yeah,
Okay.
I don't know. That's pretty familiar. Thanks for this session, Crown Hill. Have we talked to Crown Hill before? I don't think so. That's a pretty easy one to remember. What is your prediction on American? Is it too? It's too much tough. Pretty sure you mean it's much too tough to find out the facts about the future of American because lots of negativity caused by insiders trading and CEO also under investigation. Also, no one knows actual production company have, as of today, though it has book supply orders for 3 provinces. Your expertise can be very helpful for them who have a huge investment. Yeah, okay, well, so I think Marican, so those 2 directors front ran the bought deal financing and got caught with their pants around their ankles. And as part of that, it was revealed that Ben at one time was part of an OSC investigation that was never resolved. Here's what I can tell you about regulator investigations in Canada. There was no way they'd let Ben be raising money from investors if there was any chance that that investigation that was left unresolved was going to result in something. They don't leave loose threads. I mean, the funny thing about the regulators in Canada is they never give you a clean bill of health and say, okay, carry on as you were. We were mistaken. You're okay. Good to go. It just doesn't happen like that. They just don't tell you anything, and it just goes away. So in Ben's case, he's unfortunately been caught up in the actions of his 2 directors. He's distanced himself from that. He was in a bed of regulatory hot water in the past.
They fired the directors as well? They fired
the directors, and just because you cross the regulatory gray line that is sometimes a little bit more subjective than you might think, does not make you a criminal. And so there are a lot of people in this industry who have had censure from the OSC or the BCSC who are, operating public companies today and doing so, with a high degree of integrity. And that's the whole purpose of the censure process, is for you to learn your lesson. And if you do, you will be allowed to continue to operate in capital markets. That's generally the way we work in Canada. So I think that the reason Marican has been, sort of stuck in this horizontal minor drift is probably because they got caught up in that catalyzed a flight for the exits from their supporting shareholders, and from which they have not been able to recover, largely because of the perception out there that there's some big negative thing hanging over Ben Ward's head. I really, personal opinion, I don't see it. I could be wrong, but I don't see it. And I think that Ben's just now forced into a position where he's going to have to prove it out on the balance sheet. They've made great moves in Germany. He's got, we just did an interview with him the other day, which we'll publish on the site next week. I think that company might be a buy because he's got so much going on in terms of market share development in Europe, and he's been so beat up by this regulatory sort of conundrum that has embraced him. But personally, I expect it will pass in due course, and if they start to prove it up on the balance sheet, then you're going to start to see the accumulation happen. And if you look at some of the things that some of these public companies have pulled off and have not been subjected to regulatory censure or scrutiny, or even mention what Marican's doing, I just don't see any problem there. Okay, let's see. Carrying on here, I Can Invest asks, James, can you tell us more about your education and experience in investing? Are you self-taught, or is there a formal education backing you up? Second question, Midas Letter interviews increased exposure, add a bit of clout to the company. How do you select your interview guests? Are you careful when it comes to some of the lesser-known penny stock gambles? Well, boy, that's a question I would have paid somebody to ask me. In terms of my education, I was thrown out of school in grade 10. I got a graduation equivalency diploma in Florida when I was 16 years old in writing in a 4-hour exam. Had I known it was that easy, I would have quit school in grade 3. So as an investor, I am definitely self-taught. Is there a formal education? Well, I consider that the path of self-education I pursued is it was formal to me. I formally arrived at, I used to wear a tuxedo to read, so I guess that was a formal education. No, I'm kidding. Second education, no, there's no formal education whatsoever. None. No pretension towards. In fact, if I could rant and rave a bit, I would argue that some of the most innovative and successful CEOs, stock pickers, portfolio managers, analysts are uneducated, kicked out of high school bums. There you have it. Some of us are just not educatable. Okay, second question, increase exposure. How do we pick our companies? So, generally, a lot of these companies, Suzanne Garcia, she watches press releases and she reaches out to them. She's our chase producer, so she brings a lot of them in. A lot of them, she says, hey, what about this company? And I say, no, I know those guys. They're bandits. There's no way they're getting on the show. I have a simple policy. I generally try not to speak negatively about a public company because in doing so, you undermine the value proposition of the investors who have decided to take the risk. And so if I use my clout to undermine a company, I've seen companies who I didn't think have a hope in hell turn a pig's ear into a purse, knock it out of the park. And I'm glad I didn't say anything because they proved me wrong. I've seen companies that are run by an A-list of the guys who have done nothing but create shareholder value and absolutely shit the bed and lose all the money that all the investors had. So, generally I have a simple rule. If they're not on the show, it's because I choose not to invite them to the show, but I'm not making a comment on them. If they are on the show, it's because I think they're pretty much good people and are making a sincere effort to take the investors' money and turn it into a win for their investors, and generally are people who I consider better than average chances in the market. So basically, from an audience perspective, it's not to say that if they're not on the show, they're not investment worthy, nor is it to say if they are on the show, they are investment worthy. But I generally use the formal education that I've acquired and use my gut instinct to pick the companies that we choose to talk to. The more we talk to them, the more we generally like them, and the more we think they're going to do, the better we think they're going to do. Typically, we often end up as investors in these companies, and so, I want to point out that every company we talk about potentially is a future client. We do media creation services for companies. We help them with keyword advertising. Arguably, every company we talk about in the Midas Letter universe, you should consider us biased on in some way, shape, or form. We are not journalists. We are market participants. And in many cases, these company CEOs are friends of mine, and it's not always easy to see who are the friends, but sometimes it is. So yeah, there you have it. So I hope I've answered that question. Carrying on now, Stocky McStockface. There's a good one. Stocky McStockface wants to know, thank you in advance for the opportunity. Who are the major testing lab players currently in California and Nevada? I'm only aware of DIGP. Okay, I'm going to start there, Stocky McStockface, and say that I don't follow the lab scene so closely in California and Nevada. In Canada, I've mostly been I've interviewed Jonathan Page, who was with Anandia Labs, which was recently acquired by Aurora. That's really the only exposure I have to the laboratory sort of sub-play within this thing. So I'm not qualified to answer that. Are you, Ben?
I generally follow more the LPs. There are a couple out there, IPH, I believe, or ICC Labs. I mean, there are a few ones out there that are doing testing and so forth on the Canadian scene. On the American side, I don't, my coverage is mostly based on the Canadian side right now. On the American side, the few that are really moving. So, yeah.
Okay.
Probably can't elucidate too much information on that.
Second part of that question from Stocky McStockface is regarding California, Nevada, Las Vegas retail sales. Is there a current breakdown by percent of resident revenue purchases and the vacationing tourist package purchases, and on average? Oof, there could be, but I haven't seen any of those numbers. Have you?
I have not come across those.
All right. I just saw a very brisk business and my bottle said GB Sciences. So can you speak to their operations and viability as a stock pick? I cannot. I know nothing about them.
Is this an American company?
Maybe. I mean, if they're a Canadian company, I'd be embarrassed to say I've never heard of them. But yeah, I think they're an American company. So I don't know anything about them.
Okay, as we've talked about before, at least privately, we might have talked about it on the air as well, but there are plans for me. I plan on covering some of the American companies a little bit more on the small cap space. So that is coming, because I do believe that there is more alpha and perhaps more potential returns on the American side in the junior space. So, but right now we're mainly focused on Canadian LPs and the Canadian small cap sector. So I'm going to have to pass on that question. But it is coming. More reports are coming on the American side.
Okay, here's a question for you, Ben. When is Gene Simmons coming on your show?
That depends on, I guess, yourself and Suzanne Garcia. If she's not on the phone now, she should try to get Gene on the show. And that would be a great interview. All I ask is that if he does come on the show, you invite me on this chair or invite me to watch on the background. I'd love to be there because he's quite a character.
If Gene comes on the show, I'm going to let you interview him.
Are you serious?
Yeah.
Okay.
All right, and that actually is the last question in the queue right now. Let me see, have I got this right? Yes, I think I do. Okay, so we've actually got through a lot of the questions. A lot of these questions are sort of questions within the original question, and they become threads. So, we're going to go through and publish all of our answers and all of the deliberation that you've heard here as soon as our transcriptionist, Joanna Govena, has finished with them. Bless her soul, she's going to be like bug-eyed like this by the end of it all. We're going to go over here quickly to the YouTube channel, and let's see, any questions here? How important will the cost per gram be in the future? Canopy is growing at $2 to $3 per gram, where APH is around 90 cents. Okay, we're getting back to that conversation. It's 5:51. We'll take that question one more time. Ben, do you have a comment on that?
Well, I think Afria, the plan is to get below 70 cents. So I'm not sure how accurate those numbers are. And in terms of Canopy, I wasn't aware that they were actually that high. And if they are that high right now, assuming that information is correct, I think that they're going to be a lot lower than that in the future. There's no reason why they wouldn't be with the scale that they have. Even the mid tiers like Hydropothecary, they're below $1 a gram right now. So I'm not sure where those numbers are coming from. I'd have to review it.
Interesting answer. My response to that question is that, in accounting for the cost per gram, it's one of the problems we have here is that a lot of these companies are using creative accounting techniques to arrive at their all-in cost per gram, and there are many things that are not taken into account. So for me, the cost per gram has been a useful sort of conversation piece. But what I've realized after so many interviews with so many different LPs, and they might take this the wrong way, but they can basically pull any number they want out of their toolkit and state it, and there's really no way to challenge them on actual cost per gram, because I don't know whether are you including that $60 million greenhouse and amortizing it out over your cost per gram over time? Are you including consumables like peat cups and CO2 jets in the air and light bulbs and that stuff?
Is there no standard, IFRS standard or anything like that?
There is no IFRS standard.
Nothing. Okay.
And a lot of them are using the biological accounting sort of conundrum that enables them to generate negative cost of sales if you look at their balance sheet. And so anytime anybody comes on here and says, and you'll notice that I've stopped asking, when did I stop asking about cost per gram of the LPs some time ago, is because it's not that it's not important, it's that I just don't believe it anymore, and I don't have an easy way to get at it, and because they are not confined to a narrow bandwidth of rules for defining that, I don't find it's relevant at this time anymore. So in that respect, I kind of agree with the LP guys. Mind you, that is an irrelevance that they've created themselves. So, but also the IFRS is, they haven't gotten around to putting standards in place. L Pearls on the YouTube feed is asking, do you think Namaste can pull off the sole retail business model? Yeah, I think they can, because they were the biggest vape sellers online before they even that's how they got into this game. So they have a depth of experience. Sean Dollinger is one of the most tenacious promoters I've ever met. He's got his own little show at 4:20 every Wednesday that he does via YouTube. We've had him on here. those guys, actually getting back to that question, there's the company that has surprised me the most. Out of all the CEOs, Sean Dollinger has surprised me the most because they've just come up with this. They keep pivoting and keep pivoting and keep pivoting. Question from David Ross. James, can you tell us a little bit more about your recent trip to Colombia? What are your thoughts on the Latin American market moving forward? Hey, David. Happy to talk about it. So, let's see. We spent a week in Colombia. We went and visited Chiron Life Sciences. We visited their offices. We visited their phase 1 grow facility that was out in the countryside. And it was interesting because they're never going to need to spend any money on heat. They're never going to need to spend any money on air movement. Well, actually, I shouldn't say that. They're going to have to spend a lot on air movement because that sun is very hot out there. It's on a high plane. Mind you, when the air is moving, it moves through there very well. They've got different set of problems than all of the other LPs in Canada. I mean, the plains in central Colombia are subject to a lot of rain during their summer, and subject to a lot of sun during the winter. And man, it was hot there. So, different set of problems. But the conversation straight up, the CFO of the company told me that he expects to get cost per gram to 5 to 10 cents per gram. What is that statement worth? I can't tell you because I don't know what's being incorporated in that sweeping generalization, and that was coming from a company that had yet to yield a single pound of dried product yet. So, I think there's a large misconception on the part of the investing public that just because it's Colombia or Africa that the cost is going to be that much lower. Certainly labor costs are going to be lower, but those lower labor costs are offset by much higher costs of red tape, costs of having to, lubricate the machine, so to speak, in getting deals done there. So, I don't know. Exactly. Garrett Turner says cost per gram is a non-GAAP measure. Non-GAAP, non-IFRS. That's a good point. So there you have it. Okay, let's see. We are at 5:57. So Evermodus is asked, what's our take on the amount of goodwill these companies are racking up, specifically thinking of ACB? If the market goes south, things can get pretty bad on both fronts. Goodwill. Now, is he talking the goodwill that is a GAAP measure or is a GAAP standard, the measurable the measurable, immeasurable?
Sounds like he's talking about the former, but I'd have to look more into it to be able to comment on that smartly. But
yeah, I think, looking at the big guys, again, we're going to separate the big guys from the little guys. The top three are certainly, their goodwill is something that they can acquire through acquisition. Their goodwill is something that they are doing right now. I know that there are 20,000 roughly medical users in Germany. The largest provider of medical marijuana in Germany is Aurora subsidiary Pendianos. They are, there's a lot of goodwill there if they're liking the product. Some companies are delivering a lot of product that their cannabis users are not very happy about, and so they're having the opposite of generating goodwill. They're generating bad will. So when it all goes sideways, that's all going to come to bear on the rapidity with which their share prices and their market capitalizations collapse. And when that day comes, Katie, bar the door. It's going to be a big short time here, and we'll tell you when that is. But then it's going to be tough to borrow stock and very expensive to borrow stock. And if you don't have the financial firepower to stay the game, you're going to get wiped out. And that's why a lot of people don't play the short side. Anyways, that has been the longest broadcast we've ever done. It's 5:59. We lived through our commitment to broadcast on the AMA front till 6 o'clock. And boy, we probably won't be doing that anytime soon. Again, if you're watching, I really appreciate you joining us. And please feel free to subscribe and all that nonsense. And if you're strictly on waiting for our answers to be published as a normal AMA on the Reddit side, it's going to be a couple hours away yet because our lovely and talented transcriptionist Joanna Govina is busily typing away. I can see the blood flying off of her fingertips as we speak. And so thanks for watching. We'll see you next week.